to Trade Live with IG. Happy Friday. And it's Friday indeed. I thought yesterday was Friday, didn't I? I came in very excited. Then he burst my bubble.
And do you have that Friday feeling then?
I do.
We're ready to go. We are ready to go. Angie's been up all night watching her robotaxi with Elon, so we've all got that Friday feeling. And welcome to the start of earnings season as well.
I know, it's so exciting. We have all the US banks, most of them anyway, kick-starting the party later on today. We'll take you through that, take you through a pretty cool function later on because a fellow viewer asked, Ange, Rich, how do we use the client sentiment wheels? Well, we'll show you that along with Monty's note, because Monty's an analyst at IG and he puts that note together for our clients.
And then at 8:45, we've got a new segment coming up, right? It's the IG Academy. So this is where we teach whether you're a beginner, whether you've never shorted today. So we're going to look at what is shorting, when we do it, and what are the associated with shorting stocks, indices.
As Rich knows, I like shorting.
And then who have we got live from the trading floor today, Ange?
We have Martin Harris. He is IG's portfolio manager, Smart Portfolios, and he's going to talk us through not just the portfolios, but the new product features that we are rolling out, which I've had a sneak peek. Really cool. There's a stock screener. Very handy for earnings season.
Very handy.
Also, will give us a long-term view about the BlackRock rebalancing and outlook.
So, on to our day yesterday. We're not going to talk about CPI. We're not going to talk about robotaxi. We're going to talk about Ange and I's visit to the Shakespeare Globe.
Have you got pictures? Have you got video? Have you got video?
I don't have pictures, but I've got the website there. So that's what we went to see. Comedy of Errors, which also pretty much rounded up yesterday's show as well, with a couple of technical issues on Tom's laptop. But, Ange, what do you think? What's your rating?
I would have rather been watching Vanilla Sky.
So if anybody hasn't been to the Globe before, we were lucky because we were undercover, but you're still out. So it wasn't the warmest day in London, and we're in the back. If it was a football pitch, you'd say you were at the right, but I enjoyed it. I thought did you follow the storyline?
I did follow, and I did sort of read up on it beforehand too. But the thing that our fellow viewers out there might understand is that I have two kids who are at the yelling stage, and they yell at each other, and it felt like
felt like you were sitting watching.
I was sitting there back at home with my kids yelling, and I love the costumes, I had the stage. I did feel like I needed a pint to go.
Yes.
The Teach First people were lovely though, and the kids were also lovely, weren't they?
They were absolute stars, and they were so well behaved.
They were.
This was, 20 kids at school age that sat there so well behaved for 90 minutes. They weren't fidgeting. Ange was definitely fidgeting. They weren't on their phones. Ange was on her phone.
I was checking CPI. You were checking CPI
well, that's the thing.
As well.
We were there over the CPI, so we had to. We were sitting watching it during CPI and during market open. Now, shall we move on to overnight action? We can talk about that CPI. Let's go.
What happened overnight and what you can trade on.
Yeah, so let's go straight to that CPI. Let's start reverse engines back to 130 yesterday, and Ange was right. It came in slightly hotter than expected. Every part, the month-on-month core 0.3. The do you know what? I haven't got the. Months came up at 0.3. There's my actuals. Core was 3.3. The headline 0.1 higher than expected, 0.2, and inflation rate. So across the board, we had higher numbers, but what came out at the same time that people didn't have their eye on, that producer Fred messaged me straight away and said, look at these initial jobless claims. That's what stopped yields going crazy. That's what stopped the big move in the bond market, because of course the one eye on CPI, the jobs market in the moment, and that jobless claims is the highest I remember in a long time. So 258,000 there, that is a key number, and really is the complete opposite of what we were talking about, that we saw in the non-farm. So I don't know. Oh, well, that doesn't help, does it? Let's see.
And this is the thing the Fed, JP, doesn't want, right? He doesn't want jobs worsening, the jobs market worsening, as inflation is creeping back in again.
Yeah.
I mean, I don't know about you, but these were two red flags for me.
Two red flags, but it did keep bonds under control. So let's have a quick look at an update of the bond market there. We got 10-year 407, right? It did reach 409 yesterday, and we got the 2-year at 475. So, that's the 2-month. 2-year 397. So we have that positive upwardly sloping yield curve of 10 basis points. But the long end continues to go higher, and this is a worrying thing. Why has that long end gone higher every single day in the past week? And you see UK government bonds as well, 422 on the 10-year. So there are real concerns around the UK budget. There's real concerns around the US election, and that is why today I am officially turning bearish on US equities.
Nice.
At what price are we? Well, we'll go to that in a minute. But
so you're now bearish on US equities.
I am bearish at 57.81 on the S&P 500.
That's interesting because today I am now officially changing my positions on my Forex, and I think the view now is that the US dollar is going to sustain its strength, and that the euro, if I pair it with that, the euro, I'm bearish on the euro because the ECB is likely to cut rates in October and December. So signals are now pointing towards the ECB potentially cutting rates, or at least the expectation is growing that they're going to have to cut rates in October and December.
Okay, and I've got that chart up for you if you want to show it.
So this comes as the US dollar is sustaining its strength, right? So if you look at the Dixie, sustaining its strength, but keep on the euro versus the dollar, because whilst the dollar is poised for a second week in a row of gains and is near a 2-month high against major currencies, I think the euro is going to weaken further. The euro has already weakened by around 0.4% this week. And I think a lot of this is due to this growing expectation that the ECB is going to cut rates at the back half of this year.
Yeah, definitely. Back half of this year. We're in
it, guys. We're in it. Yes.
Santa is going to enjoy lower interest rates across Europe. So, okay, 109.35 there. 109.35. So that's our two sort of Friday ideas.
Yeah.
Isn't it? I guess I'm bearish S&P 500, and look, it never works. Right, it's at all-time highs. People are probably saying, "Oh, well done, Rich, picking the highest level that we've ever seen in the S&P 500 to turn a bear." But the reason is I'm worried about that long end, of the curve in the US, in the UK. We've got those two huge hurdles coming of the budget. The Times leads this morning. Let me see if it was the Times or the FT. There you go. Financial Times. UK executives dump shares on fears of Labour capital gains tax rate. I read the article. I'll save you the time. It doesn't mention which companies they're talking about. It just says that, look, UK executives have real concerns on this capital gains tax rate. So they're simply selling ahead of that.
What happened to if it crosses 5729 on the back of this packet, then 6179 is the next level?
Well,
or was it was it your call? Was it if it closes at 5729?
No, that was just my day target. And then that 6179, we didn't know what that was, but it still didn't work anyway. It was
actually it did work for the short term because I took profit.
Anyway. Oh yeah, we both made a little bit of money out of it.
Yeah.
Okay, right. Am I going to let you go on to Elon?
So excited.
Let's hear it. Come on.
For those of you that trade Tesla and stayed up like me and then went back to sleep again, I was like, I first of all, I didn't get my afternoon kit because of that comedy of errors.
I think I looked across. You were asleep at one point.
I was actually like down like that, going, why? At one point, I looked at Rich and said, I thought you promised me a medieval bar or cafe in here, and I don't see one.
It was the two of us sitting there. We both wanted to just go and get a pint, and we couldn't because there was 20 school kids with us.
And also there wasn't a cafe in there, was there?
Oh, there was a bar, yeah.
What? Really?
Yeah.
You didn't tell me.
Yeah, I thought better not to.
Kind of friend, right? Everyone.
Right.
Was like, So Tesla was, as I expected, a lot of noise.
There's the picture, guys, of the old robotaxi there.
Yeah, there you go. No pedals, no steering wheel. Everyone got slightly excited until it became apparent that there was no actual date, right? There was no actual date as to when this is going to be ready, as Elon Musk style. Everything's a bit opaque when it came to anything to do with dates or deliveries, and all he said was the car that was shown at this event, the one that you just showed on your screen, Rich, will cost below $30,000. So really, don't have to read everything out there, guys, if you didn't catch the or watch the show, if you didn't stay up like myself for a bit. But there you go. It all looked very swish, right? But
and it's now a cyber cab.
It is a cyber cab.
It's no longer a robotaxi, it's a cyber cab.
Yeah. Yeah, everyone's saying much cooler with cyber in front, and there he is in all his glory. But really, the only takeaway from all of that is like maybe there might be a new Model Y. That was pretty much it for me.
Well, it was the fact he didn't announce that Model Y. That's a disappointment.
It is.
The no timing of the release
details.
of these is a disappointment.
The Robovan. Did you see the Robovan as well?
I didn't see that one, no.
So yeah, everyone's like, oh yeah. So everyone's excited about this Robovan. I'm going to try and put an image up for you. Caleb in there saying, oh, so ugly. As you can see here on my screen, it's large. Many people out there excited about the Robovan were hoping that it was going to be like the next big thing, next big cash cow, and that it was going to fit in their garage. I'm trying to show you the picture. Where is it? Tesla. That's not it, is it?
Comments on the chat so far. Dale's boy, watch Cybercab. Good looking car, but the event was a waste of time.
Yeah.
Robovan is a better looking than the first bus with the drunk guy asleep in the back seat that we have in Aberdeen.
There you go. And also, it doesn't fit in a garage. It will not fit. It's quite big. It's not going to fit in a garage, right? So there are tons of people joking about how this is going to be, instead of a robo-van, it's going to be a robo-camping caravan, right? Because you can kit it out and stuff like that. But yet again, robo-van, no date. Or it's pushed out so far that everyone comes like 2026, 2027, is that what we're talking about?
Yeah.
So no detail. So I am still bearish.
And the stock needs details, doesn't it? Because of the valuation it's at, over 148 times earnings, it needed details so analysts could put the numbers in and justify the valuation.
Yeah.
So let us know what you think on the comment section across here. And good morning to the British Indian. We're trying to get that clock on the screen for you from your thank you for that comment yesterday. Good morning, Monkey Man. Good morning, Gavin. We've got all the likely lads here on a Friday morning. Thank you for joining us yet again. Let us know what you think of the Tesla share price, how that's going to open, and we'll get that in the all sessions at 9 a.m.
I want to know from Dale's boy if he's been in a Cybertruck, because I'd love to be in a Cybertruck.
Oh, the one that's actually already out.
Yeah, the one that's had numerous issues and you know, I think during the opening, I don't know still whether it was a gimmick, but apparently it's got bulletproof glass.
Oh yeah, because you need that.
But during the opening, during the debut, they did a demo and it cracked.
The glass did.
Yeah, didn't you hear about it? It's cracked.
What a
but we, you know, there's a bit of me, you know, after following Elon for so long that thinks that this is just another gimmick, right? But I do want to drive it because it's so peculiar, and you can drive it both ways. You can press a button, you can drive backwards.
Backwards as well. No. Right, so let's see how that goes this morning.
So
for those of you that trade the Hut Group, THG, there was a capital raise last night. 14% of the company was placed successfully. That was oversubscribed. So if we want to look at that RNS there, oversubscribed and upsized fundraise of 94.5 million. Guys, can we get that on the screen, please? Existing long-term and institutional shareholders contributed approximately 50 million to the fundraise, led by the CEO, who invested 10 million. Right, so the Hut Group closed at just over 51 pennies yesterday. The placing was done at 49. Right, so look for a little bit of pressure on the stock potentially this morning, as 14.6% excuse me, of existing issued shares were placed. But they raised 95. So, you know, there's always the chance that that fundraise is taken well because of the extra cash that has been raised. So Hut Group, one to watch this morning. Another one to watch is BP. We had a trading statement come out from BP. And let's just get that one up for you there.
I don't like trading the oil majors at the moment because there's so much happening in the oil space. So I prefer trading the WTI instead.
Rather than the actual equities.
Yeah.
Yeah. So BP said a drop in refining margins would reduce its third quarter profit by 400 to 600 million from the previous 3 months. The British Group's oil trading result is also expected to be weak, it said in a statement. So I don't want to call it a warning, but there's negative comments in there, isn't it? So let's see if we've got an indication yet on that. We'll get that for you before the market opens. But yeah, BP looks certainly like it's going to be one in play this morning.
Also, take a look, keep an eye out on TomTom as well, because TomTom's third quarter sales missed estimates. This company has been trying to reinvent itself for some time, so maybe one to short. And Sainsbury's, did you mention Sainsbury's as well? An offering by holder, price in at 280 pence a share. And also Hayes, first quarter total comparable net fees 14% there. Saga, do you ever trade Saga?
No, back in the old days.
Just wondering, because a friend of mine, his brother, actually works as the CFO of Saga. Maybe I might call him up.
Right, we've got an indication from Goldman's on BP, so flat to up 1% to start off. So lightish on numbers, refining margins down 20% quarter on quarter, but production flat is ahead of what Goldman's were expecting. So flat to up 1% for BP, remembering they have come down from 440. Axel took us through that chart. It has seen a terrible few months. So yeah, BP expected flat to up 1.
Also, make sure you keep an eye on, the start of Friday is likely to be cautious, because not only have we got those big earnings that are coming later on in the day, but also we've got over in France, the new government has just presented its 2025 budget on Thursday. So looking for any sort of signs of impact of that trickling through, because they did unveil plans for tax hikes on big companies to try and tackle its spiraling deficit.
If only we had a French expert in the gallery.
Yeah. If only we had a producer, Fred Cam, because we could now go straight to him for instant French analysis. Yeah, so
it hasn't been voted yet. Is the answer from in France?
Stellantis could be a mover too, because they've just confirmed that their CEO Carlos Tavares is going to retire in 2026. Good on you, Carlos. Carlos is one of those that is a staple. He's always at the car shows.
Yeah.
Yeah. So we'll retire in 2026.
Do you think that'll affect him there?
I don't know, because Stellantis has gone through so much recently, but
it's right on its lows, isn't it? It's had such a tricky. Let's get that chart up there of Stellantis. Look at that. Peaked in late March at 27 euros and now down at 12. Oh, what a few months there.
It's a really ugly chart, that one. But, you know, if you like technicals, it's a clear downtrend from where Rich's cursor was, right? And I know lots of people are messaging saying, you know, Ange, do you normally trade, you know, when there's a change of leadership? The short answer is yes, if they haven't got someone waiting in the wings.
Right.
So at the moment with Stellantis, you know, there've been a few sort of murmurings, right? They're thinking, you know, we're just going to steady the ship. We're going to have their CFO, you know, steady a ship amid management, the management overhaul. There you go. If you whack up Rich's screen, you'll see the news, which you can find on your IG platform by just hitting the news button on the Stellantis chart. Got Doug Osterman, there you go, the CFO, as I mentioned, sort of steadying the ship, but within that sector itself.
Or is it rearranging the...
Yeah, it's like, oh, look, musical chairs, right? So there's no clear heir apparent is to take that void, right? Take that space. So I am thinking maybe because of that, there might be some downside for Stellantis.
Right, shall we take a look at the futures? So, S&P 500 flat as a pancake. Oil down 1% this morning. We've got gold back up at the 2640. 2,640, well, 238. Give us a little bit there. Copper, 444 bucks. Vol just straddling that 20 level. We've got the FTSE looking up 12 basis points pre-market. Much of muchness. It's one of those Fridays, isn't it? There's not much going on. Iron ore up 1.5%. Bitcoin up 1.7. So
before we go to the ad break, could you just show me Siemens Energy?
Well, I'll tell you what. Let's go to the break, and then we'll get that back with 2 minutes before the open. Join us after the break.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into 3 key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free and gives you access to dozens of trading topics.
Hey, welcome back. We're live and 2 minutes to go, Rich.
I've just popped out to get a coffee, and my goodness, it is a beautiful sky out there.
Wow.
I've even taken a picture for you, so I'll get that up on my laptop shortly. But we've got some more indications out there, don't we? As well as BP. What else have you got for us?
ADP raised to overweight JP Morgan. Price target now 150 euros. We've got ArcelorMittal cut to neutral at JP Morgan. BASF also cut to neutral at JP Morgan. Credit Agricole cut to neutral at Citi. Quite a big move from Credit Agricole yesterday. And Thales cut to hold at Berenberg. One of them has caught your eye as well, didn't you? I traded this earlier in the week. When it first initially had its drop, Vistry.
Vistry, yes. JP Morgan cut to neutral with a 970 target. Very quick eye on that's our view.
Wow, look at that.
From the studio window. Not, I wish it was. That is the view you should have from the studio window. But that is a beautiful morning out there. So you lucky lot, switch off the show and get out there. Right, what do we got?
For Friday, guys. Can tell it's ready.
Or stick some trades on.
Yeah.
And then pop out. So we've got the opening bell going off as we speak. Let's get those early. Which one was that? Sorry, Fred.
BP
down 2. Did you? Oh, sorry. I thought you said 2. Okay. Well, that's, yeah. If Goldman's are saying it's going to be unch, it's going to be unch. So yeah. BP down 1, Sainsbury's down 3.7. Sainsbury's, there was a placing yesterday as well. So if you're looking at Sainsbury's wondering why that's down, there was also a placing. The QIA, remember when the Qataris came in to take a big stake in Sainsbury's? Well, the Qataris are now, they've sold 109 million shares at 280. And the book was said to be oversubscribed. So that stock, now down 5. So Sainsbury's is getting
slammed
from the Qataris, selling 109 million shares. We've got BP down 1.3. In Europe, we have Bayer down 1, and Rheinmetall down 1. Much of a muchness, BMW as well.
We're still waiting on THG, but it's quite a mixed day out there, I have to say. Vistry Group up 2%, actually.
Where is it now? What price is it at?
It's now at 915. And actually, look at that. That's the 10-minute chart there, but I'll show you what happened earlier in the week. See that huge drop there, and it tried coming back up again, but failed to breach the. Well, it did sort of almost breach a 10 level, but not quite. And now it's come back up again after that. I think there was a broker move earlier this
JP
morning.
Morgan down to neutral, but a 970 target.
Yeah.
So they've obviously tried to get out on a Friday under the radar, bit of housekeeping, down to neutral there.
Let's take a look at some of the other countries. So France 40, they're having a look at the winners board. Capgemini up 0.5%, along with Uniball, ST Micro also on the winners list. But on the losers board, at the top, Teleperformance, Edenred, and General de Establishment Michelin. I'm sure I've completely butchered that.
If you're like me, you haven't traded Sainsbury's for a while, you're wondering where this takes us back to. That is back to where they were at the start of August. So it has had a nice run up. Sainsbury's seems to be around that 290 level. I remember back in 2005, every single morning I had to put 8 sell orders in for the Sainsbury family. And it was way above. It was like, I think at £4, £4.50, £5. And we had to put those sell orders in when I was at Credit Suisse. And it was such a boring job, right? But you had to do it manually. And thank goodness the day that it was actually, I think it was bid for, then they eventually got there and they all went, ching, done, complete. And they reduced the Sainsbury's family reduced their stake in the company, which was reported, thankfully. And so that was, but if I'd forgotten to put those orders in every single day, and I did it for probably 18 months,
wow,
then I would not have,
I mean, obviously now you can automate all that, can't you?
I don't know if it's good. I mean, you've obviously got good to close orders, and then you've got, what's the other one? GTC and GT? Good until further notice kind of thing.
No, we have it on the IG platform.
Yeah.
Good till cancelled and good till date.
Good till date.
There you go, GTD.
Yeah.
So if you go on to, you don't have to sit at your desk, people. You have automation here on the IG platform. So you can go to your order tab, next to your deal ticket tab, go to order, and when you see under price level, you see expiry, you can choose good till cancelled or good till date. There you go. The ONG does not like being tied.
It's very useful because I have got a bid in to buy back my Nike short calls in the Tasty platform, and that was exactly what I was trying to do yesterday.
Does it give you an option to?
It was, yeah. There was a GTC, but I couldn't not remember what the GTD was. So there you go. Thank you for that. Still learning. every day.
So I'm going to take a look at euro versus the dollar, because I talked about my new theory now that we had that inflation, that CPI number out of the US, and also that initial jobless claims, right? And I'm looking at the daily chart here for euro versus the dollar, and what I'm seeing is there are a lot of sellers, or there were a lot of sellers at that 10945 level. See, it sold, we got to there, and then another lot of bag holders. Oh, just some breaking news coming through. Sanofi is in talks to sell a 50% stake in its consumer health unit to CD&R. This is, we've been talking about this, haven't we, Richard? We were waiting on this because it was meant to be one of the biggest deals this year, and that has just come through on breaking news. Sanofi in talks. So
live from Bloomberg.
Confirmed in talks to sell a 50% stake in its consumer health unit to CD&R.
Excellent. Right, let's have a look at where THG has opened now. Where, remember that placing last night, 14% of the company placed in THG last night successfully at 49 pence. The stock has opened below 49. That's never a good sign, right? So it was at 51.7 at close last night. It's now opened below the placing price. That always makes you a little bit nervous if you've been one of the buyers in the placing at 49 to see it then open at 48. So it's going to be an interesting one to watch. So THG down 7.5%. I would think somebody would defend that. I don't know.
What happens in a sort of, in a bank when you take a position and the next morning this happens and it's like opens way lower than
it's if you're managing the placing.
Yes.
I remember doing one in Chorus Group.
Do you all just like go quiet and just, or?
Oh, yeah, silence across the whole desk. In ST, when the French government sold us 7% of STM in 2005, December 2005, it cost us the whole desk bonus for the whole year. We lost it in December on STM, thanks to the French government. Merci beaucoup. But we helped out the French taxpayer, so that's that was a great thing. But I remember in Chorus Group, we had this incredible head of sales trading called Jerry Keneally. Now, G-Rod, as he was known, was this huge figure in New York, came across to London to run our sales trading desk in London. And G-Rod said, hey, junior. I was the junior on the desk. And he goes, come here. And he made me run a placing in Chorus Group. So I was responsible, and it was a first come, first served. Now, placings are normally done after market now, right? But back in the good old days, we used to do them in the middle of the day, and it was a shout of, right, everybody listen, first come, first served, 60 million shares in Chorus Group. It was a steel company. And then everybody has to phone their clients at once, and the clients shout out, I'll buy 100, I'll buy, 100,000, I'll buy 1 million. And I have to do the mental arithmetic on the way down and say, right, 30 million left, 20 million left, 10 million left. And then there was one guy, Phil Platts, would come in and he'd say, yep, I'll buy the rest. And that was it. Plattsy would take the rest, and the deal was done.
Wow.
And so that was the real good old days.
Just showing Saga, because you of little faith, you said, yeah, back in the day. Look at Saga's shares. Just showing you the.
That's old news, isn't it?
Love it. Saga is currently up more than 10%. Actually, maybe more
20.
than that now. Woof. It's come back about my figures on the daily chart showing 8.78%. But that is still some huge move there, because of broker. I think it was a broker move this morning. So those of you that trade the space, I mean, Saga. Just taking a look at the news there. Saga posting Half year underlying PBT 27.2 million sterling.
And selling its insurance underwriting business. So Saga and Ageas in exclusive negotiations. Saga may receive up to £60 million in a contingent consideration, and Ageas to pay them $80 million up front. So certainly the stock taking that news well, and that's the insurance underwriting business.
Well, Jerry's brother's going to be happy about this. So yeah, move there on Saga.
Up 17% now.
Yeah. BP also one we're watching this morning. If you're just joining the show, good morning to you. BP said a drop in refining margins would cut its Q3 profit by $400 million to $600 million from the previous 3 months. How are we doing on BP?
So yeah, now down 1% there. So let's update you on the FTSE movers. Watching that Sainsbury's around the 275 level. So Sainsbury's down 4.7%. Tesco down 1.5. Big mover on the year. BP just trying to keep that 407 level. Down 86 basis points. BAT's down 93. So we've got a bit of weakness throughout the FTSE today. GSK now down below the £15 level. And you should have kept that short on yesterday.
No, but I time box my trades, you see. I time box it. Whilst you're talking, I'm just putting in Saga's turning. So I'm going to put in a sell there to try and catch that bounce back down. I'm going to put my limit just there. So you're watching this live. It's quite a tricky thing to do on the go, I have to say. But pushing my limit slightly lower and placing. Oh, make sure that you click away, because sometimes this is a very sticky. That's why I sometimes prefer using the buttons. Actually, it's refusing to let go. I do not know why. Maybe if I go
just incidentally, Andrew McKelvey's saying THD down around 90% since flotation. What's a few more percent this morning? So that is so painfully true, isn't it? That's been a real tough ride for those. One of the most popular stocks that is traded here, or was, perhaps not so much anymore. Yeah, THG. Let's get an update on where
originally
that one
called the
now.
HUT
Tough
group,
morning.
Right? They changed it into an acronym, so it's easier to say.
So it is managing to hold that 48 level, traded down as far as 47.60. I'm imagining a few people were probably stopped out, and that was the weighing on the share this morning. But a reminder, 14% of the HUT group placed last night in a capital raise for the company, and that stock trying to keep, it was placed at 49. It'll be trying to get its head back above that at some point today, I'm sure.
So for those of you wanting to trade the US session as well, just a big reminder out there, we've got JP Morgan, Wells Fargo, BlackRock, BNY coming out with results before the open. Those are the US earnings that we are looking out for. It's already been a really busy day on the European session. ADP raised to overweight at JP Morgan. We also saw Thales cut to hold, Vistry Group cut to neutral at JP Morgan, and Rich showed a bit of bounce later on from Vistry Group after that. But also in terms of movers this morning, we had BP Q3 trading statement. I forgot to check on TomTom.
Oh dear. We had to check on Tom yesterday when he was doing the Tom's takeover. Because his computer went dead, and that was apparently thanks to you. So an update coming up there. But Philip Lake in the chat, on the comments on YouTube. So reminder, you can ask us live questions on here. Congratulations, Philip. Nice to have a lot of shares up 20 to 30%. And Weight Watchers up 90. What is a good plan to sell? So that's around your feeling. One question is always, what are you going to do with the money? right? If usually you keep your money in the savings account in a bank until you need it for something. But it's different with investments because you're looking at opportunity costs. Do you think there is a better a place to get a better return or potential capital increase on your shares if you sell now? Now, if these are an investment plan, as we speak about often, in my SIP and ISA that I showed yesterday, I tend to keep my positions in there for a lot longer than I do on the stuff we're looking at for trading positions, right? So it sounds like these are more investment positions. Do you have a plan on what to move to next? Now, fund managers would generally go, maybe a bit of a switch of sectors. So I've gone a lot more defensive now, right? You saw I've got Vodafone, I've got SSE.
He's also gone bearish today on US stocks.
On US stocks. So I don't like US tech at the moment, for example. I don't really like the highly cyclical stocks. So yeah, I would never give you advice on single stocks, so I won't say anything about Weight Watchers, other than there's a bit of belt tightening going on.
Oh, boo.
Sorry, it's Friday. Come on, give me a break.
No belt tightening, as he didn't have a belt earlier this week. Yeah. We took that off him.
So yeah, if you don't have any plan, then a gradual sellout, right? So as I mentioned, the price trigger strategy as you buy. So you buy 15% of positions away in. You can equally DCA or price trigger on the way out. And you can just layer some offers in the book that you'll sell at the time. Just watch your commission costs. That's one thing. You don't want them to be a big percentage of your of the great income that you've made from it. So, Philip, thank you very much for the question. Any follow-up questions, pop them in there.
Also, I find the layered exit quite good as well if you're, in a losing position and you emotionally want to detach yourself from it.
That's the best thing about having stops, isn't it? Is you just take all the emotion out of it.
Yeah, and then it's always less painful to come out in layers rather than a whole chunk at the same time, because you know that if the price action turns in your favor, then you would have caught some of it. Right, so we just have a few more minutes to go. Just a quick update. Eurostoxx index down, but we have seen quite a few big moves on individual stocks. The BP, the Saga was a big mover as well. THG, let's just have a look at THG to see where we are right now.
Should we, after that, should we take a little look at commodity world as well?
Yeah, that'd be great, because oil is one that I keep an eye on, and oil has had quite an interesting week in a time when we've had so many different things happening. We've got tensions in the Middle East, but we've also got some signs of rising supply, and also we have in the corner of our eye, this rapidly changing interest rate expectations from the Fed. I mean, we took a look at it yesterday, the CME Fed Watch tool, and we saw that there was a slight creeping up of even the 0%.
I think there's been a bigger change now.
Has it changed even more now?
It has. Another, I think when that came out yesterday, actually, we can't chart that, unfortunately. But when the CPI number came out, I think it jumped. But then over the day, it gradually came back down, which is an interesting one. And then we're looking 63%. But I was watching CNBC last night. Do you consider CNBC a rival of ours?
No.
No, I don't think it is it? I don't think they would want to be considered a rival by us two wittering on each morning either. But they had a really good debate last night. Rick Santelli, the hero over there in the bond pit. They had a really good debate last night, and it just shows you the differing in opinion. A large consensus seems to be that the market is pricing in too many rate cuts. but then the market doesn't change. You know, it's so interesting. Right now, we just had that comment on the chat in the YouTube there. Any more questions, pop them into the comment section of YouTube. But we also have the feature where you can write to us at ask@ig.com. And we're going to go to Confirm and Send, where we answer those questions. Let's go.
Right, Confirm and Send, one of our favorite segments here, where no answer is too difficult or too weird. Yeah, the weird ones I will direct to Rich, but we answer them all here for you as soon as we can. So let's, Producer Fred, let's knock up the first one. Could you show me how to use the client sentiment tool effectively? This is from Kilos W. I can do, and Rich, I'm going to need some time to.
I'm going to be learning here as well, actually, because Pete tried to teach me this, but there was something else going on at the time, so I was only sort of 50% paying attention to him. Yeah, client sentiment tool, because IG has, obviously such a large number of clients that you get a real feel for the market. What are they doing in particular stocks? We've of course got the Explore button on the app. So if you go onto the app, and at the bottom right-hand corner, you can go to this Explore button.
Right. So he's going to show you the app.
Down here, tricky to get, but yeah, Explore button, and it has, if you scroll down, it's got the top 100 traders, right? So the top 100, which Pete Ward confirmed I am not part of, top 100 traders and their favorite positions. So short Wall Street, long Vodafone, long oil, long Hang Seng 50, and yeah, so that's part of it. But then we've also got this client sentiment tool,
which is really cool because it kind of links to that. So if you're not out and about like we were yesterday, trying to check the CPI number at the Globe, there is a way, and a really good way of doing it on your desktop as well. So any chart, any financial instrument you're on, whack up my screen, I'll show you what I mean. I'm looking at WTI, I'm looking to put trade in, but I want to know what the client sentiment, and you see it on the menu bar at the top where my cursor is floating. It's to the right, and if you hit that, this gives you a bird's eye view of how many IG clients are currently long or short. And in the case of WTI, it's 70% long, 30% have short positions. Now, as Woody rightly said, this is not a weighted, it's not weighted at all. This is per client. But what I find more interesting, Kilos, is that it gives us to the right-hand side of your desktop. If you whack my screen up, it gives you the last hour. Can you see the last hour where my cursor is? It says 51% sells, right? Today, 51% sells, and then it also gives you the week. So last on the week, 50% buys, and also the month. So this is a good, what I call sentiment change indicator for me. Yeah. There's another way of also understanding client sentiment. It gets sent out to our IG clients, and it's a piece done by Monty Safieddine, one of our analysts who is in sunny Dubai.
That was great pronunciation. That was a difficult surname.
I used to work in the Middle East, so in Dubai and Abu Dhabi, so I've had a lot of smacks across the face with Lebanese bread if I don't get the pronunciation right. He does a daily market report, and this gets sent out around sort of Monday early-ish our time, because he's sending it from Dubai, right? So it'll be early our time. But it's a daily market report, and I really like this because not only does it give you, so this is the one for Friday, October 11th, not only does it give you a market brief and sentiment overview, right? So it goes through things like headlines, covering the Tesla's We Robot event, but it also gives you a bird's eye view on IG's client sentiment on oil, which I just covered just now, remain heavy long in oil, and it gives you sort of the percentages, who's long, who's short. Further down, can you see that there are certain calls? So I'll be using this for my euro dollar position that I'm going to take today. The inner ring tells you what the sentiment was before. The outer ring tells you how it's changing. Right?
That's brilliant. Whoever designed this, absolutely fantastic. That's a really...
Actually, it was Monty. That's why he's got no hair left.
That's it's artistic as well as...
It is artistic. Look at that. But what I like, because I like technicals as confirmation, is at the top of this document, you've got MA short, moving average short, bearish, moving average long, neutral. It has RSI, neutral. So you want a snapshot. Let's say you need one last confirmation to see how this is going. He even has a Bollinger Band, color coded, whether it's lower extreme, neutral, which is gray, or high extreme.
Yeah.
So I find it very useful. I hope that answered your question, Kiros.
And that also goes together with our institution report. That is that a separate one that we send out the report and it says what institutions are holdings as well as what clients are holding. So maybe we do that one another day in another confirm and send.
Yes, you can find that. You can find that in a separate section. Yeah.
Yeah, I think it's a Monday that one gets sent out. But yeah, you can actually see institution buys and sells versus what clients are doing, and you can see if there's a mismatch. As we say, the sort of professional funds, divergence in the professionals versus the retail, as they're called.
There you go.
Shall we go to question 2? What does rolling an option mean? Is it like getting a new contract, or do we save some money? Well, right, great question. What happens, and Ange's question along with how many times can you roll
rolling
an option? Brilliant.
I do that just to annoy him.
And the Tasty platform makes this so easy. So a reminder, there is a Tasty Trade platform within IG. You just need to sign up real easy. You do a quiz. Even I managed to pass the quiz. So, it's one of the easier ones. You get through that quiz and then, pop some money into your account there. And the usability and how user-friendly it is absolutely incredible. So if we can take a look at the platform here, I'm going to show you how to roll an option, and that should help explain what it is. Now, I currently have an S&P 500. The ETF is called the SPY, SPY. That doesn't mean that we work for MI6, MI5, CIA. That means that it is the spider, right? That's what it's been nicknamed since it started in 1991. It's the spider ETF, and I currently have a position on, I'm long 2 of the 540 level puts for December, right? So that's December the 20th, and that's what your Tasty shorthand code means, that I'm long 2 of the December 20, so that's 70 days away, the 540 puts, and then it's a put spread, right? So it's the lower option I'm short of. So I'm short 2 of the 485s. Now, in S&P 500 terms, that means it's 5,400. That means it's 5,400 down to 4,800, down to 4,850. Take advantage of the S&P dropping from 5,400 down to 4,850, and I would benefit from that. But below 4,850, I wouldn't have a position because they're equal size. However, what are we up at now? 578? Well, there we go. 576 is the current price. So I might want to roll this higher. So how do I do that? Well, first of all, I click on the position, And then down here in the bottom, I'm going to take us so you can get that on the screen. Can we
pop up when you click on it? Normally it pops up, doesn't it?
Well, it is, but unfortunately, just the framing, unfortunately, can't quite get it on screen. So down at the bottom left here, we've got actions. I click on actions, and look at that. Roll expirations. So what I am doing here is, do I now think that as we get closer to the December expiry, it might not come down as quick as I thought it had? So do I want to roll it out to a different expiry, the end of December, the middle of January, or the end of January, or even February? Well, no, I think we've still got 70 days to December, so I think I've still got decent time. However, where I'm clearly wrong is that I'm too low, because the S&P is going to have to drop 6% before I even start really. So I want to roll that strike higher. So that means I can change the structure of the put spread. Right? It's 5,400 to 4,850. I'm going to take that 4,850. I'm going to take that higher and hope 50. I'm going to take that higher and hopefully.
I think you can take it up to even 560.
And hopefully.
I think you can take it up to even 560. You got it at 550, right?
So there we. So it comes up as you see on screen. So that's the position I've got. So I'm looking to sell two of those. So that S red button on the side, this is what I mean by the usability. I can just drag that to where I want to roll it up to.
Can I?
Right. So let's, as you suggested, let's roll it up to 550.
Can I just say from a technical viewpoint? Can I say from a technical viewpoint, at the moment, around 550 is safe. Yeah.
Safe. Well, no, I'm going to be long it. Remember.
Yeah, long it. Yeah, to change it to that.
Long it. Remember.
Yeah, long it. Yeah, to change it to that.
Yeah. There we go. Look. Oh, that's. So there we go. So Anne's showing you. So 5,400 might be a little bit low. So we're going up to the 5,500 level.
Yeah. The reason why I say safe is because that's a level that because you've got two trades, you've got two legs on, right?
I've got two legs,
Yeah.
but so I would get short at that level. Obviously, there's delta all the way down, so I'm benefiting. But on the day of expiry, I need it to be below that.
Right. Yeah. That kind of makes sense.
So, and I like having that as a bit of insurance anyway.
Yeah.
Right, because I'm long in my pension, I'm long in my SIP ISA, that kind of thing. So this is why I always, I'm happy. I'm not looking to make, 10% in a month or anything like that. I'm one of these guys who wants to make 1 to 2% a month, and therefore, if I can be up 15% on my total.
Cool.
But I want to be protecting.
Insane. This is fantastic. And Rich.
Thanks, Mum. My mum on the chat, clearly.
Every time you roll, does it cost me?
Yes. So if we look back at the screen there, I'll show you exactly how much it's going to cost. So this tells me I'm going to sell my two that I already own, and I'll get $6.19 for that. So I will receive $6.19. And then to buy the new one will cost $7.69, right? So in other words, and then we can go down here. Does that get on screen? Let's see. Down here, my limit price is $148, right? There you go. It shows you the limit, and it also shows you the effect it's going to have on my buying power. It's going to be 296 debit. So to roll this is going to cost me $296. But I get $10 more of protection from it. Times 2 contracts. So I'm spending $148, and in my eyes, I'm getting $10 extra of protection there. So let's just see if this is open yet. Reviewing. It doesn't quite. It's only 8:34 in the morning. So
you can only do this at 2:30, right? we're too ahead of the game.
No, spiders you can trade earlier, but we're a bit too early at 8:30. Single stocks, you're correct. You can only do those from 2:30. But I am going to pop that in, because. So there we go. That is rolling. So a reminder: you can roll expiry date. You can roll expiry levels, right? For example, if that was in October, I'd probably roll the October to the November. Because as we know, Tom and the guys like trading when it's 21 days, inside 21 days to expiry, it's probably time to roll that baby.
And one other question, because I hear them, every time we get close to the Friday, right? There's a huge hubbub of
expiration Friday.
Yeah, expiration Friday.
Third Friday of every month.
Oh, are you doing this? Are you rolling? Are you coming out? Am I right in saying that most people who trade options come out like 50% once you're 50% into the trade? Like, no one ever goes so close till it's like near expiry, right? Am I right?
Guilty. Traditional. Well, this is what it has been great about coming in and joining the studio team, right? And joining the Tasty team is that I've learned, because guess what? My Nike, I ran it to expiry last week.
And?
I realized that Tasty Trade's slightly different from the IG platform, because you get the stock. IG in a CFD account is all cash settled, right? So that's one difference to really take note of. IG is cash settled. Tasty, if you run it to expiry, that very, very few people do, you actually get the stock position. So as a reminder, I was long of Nike puts at the 87 level. Nike closed at 82.50 on the Friday. So therefore, the puts were transacted, and I received a short position of 200 Nike shares. So I got margin called over the weekend and all sorts.
Rich.
So a reminder, very good lesson for me. If I was running it to expiry,
right,
then you have to be
You're the
careful.
first person I know that's done that.
Yeah, I've always done it.
Wow.
Always done it.
And I'm glad you showed SPY as well, because can I just tell you that when you use the Tasty platform and you punch through that trade, it does go and touch the market. So if you hit up my screen, this is me at the SIBO, and that's the SPY in the background. And that's with the Tasty guys.
Oh, brilliant.
Wow, the amount of sound. It's like being in the middle of a cattle farm when the trade goes through. And next to me is the Russell pit, and next to that is the VIX pit. And once a huge trade goes through, everything quiets watching sport.
Really?
Yeah, it's amazing. Absolutely amazing.
Just run us through who everybody is in the picture here then. So we know Frank, obviously.
Yeah, I don't know who the dodgy person is next to Frank. There's Liz and Jenny who run the Liz and Jenny show. They are awesome. They are one of the traders that used to, well, both of them, still active traders. They used to trade on the SIBO, so for them it's like going home, and they're at the SIBO live.
And is this where they do the show from?
Yeah, every
Those
Wednesday.
Desks. That is crazy, isn't it? Wow.
Yeah, and we've got Quentin behind Jenny, and he is now working on the cash side of things for Tasty. We've got the other two behind here. They're part of the research team. So there also, I'd love to write, if you come back to me guys, I'd love to write a book, because I've been on the LME live trading pit, but lots of the trading pits in Europe are now gone, right?
Yeah, so sad.
I'd love to write a book about their hand signals, because you see a trade sign comes through, all like holding their tablets, and they're all watching like one eye on NFL or baseball. There's always
and this show. They watch this show, don't they?
Of course they watch the show, which goes live on the floor. But they also, when the trade comes through, someone will do something that looks either like that or like that. And if it's like that, it means I'm taking the whole trade. But if they do that swiping motion, and then that's when you hear that uproar of noise, it means I'm splitting this, guys. I'm splitting Rich's fat trade that's come through. So if they're 50 50,000 orders, you then soon start seeing people shouting, and it's very loud. There are mostly men there. I mean, Jenny and Liz are used to it, but you see them doing that with their heads, 1,000, 2,000, 3,000. It's really quick, and the trade is split within seconds.
I'm surprised we got you back. Sounds like you loved it.
It was great.
I must admit, when I went onto the NYSE for the first time, my foot touched that floor, beautiful wooden floor, and I got nervous instantly. I got butterflies. It felt like I was walking out onto the Wembley pitch in an FA Cup final.
Did you do your hero?
Such a buzz.
Did you do your hero's walk?
No, I think I was making sure I wasn't banging into, because I was just a little kid, right? I was 24 years old, going on like, you know, eyes sort of everywhere.
Did you have your high heels on? Because you know, before they had the comb stages.
Yeah.
Yeah. Tom and Bat all wore huge, chunky. They call them high heels, but they're clogs, so you're taller and you can get the deal first.
Right. On that note, let's go to break. We'll see you after for our new slot of IG Academy.
Rise and shine with IG's new morning show, Trade Live with IG, covering all our UK product offerings, including our OTC and exciting new US listed products. Starting in September, join us every weekday from 7:30 to 10 a.m. for exclusive insights from our trade desk, expert trading concepts curated by our friends at tastylive, global guest appearances, and loads of viewer interaction. Regular platform feature highlights and up-to-the-minute market updates. From casual chit-chat to in-depth analysis, we've got your morning covered, live on IG.com, YouTube, and in IG's trading platform. Whether you're a seasoned professional or just starting out, there's something for everyone. Tune in, stay informed, and kickstart your trading day live with IG.
CFD trading is the buying and selling of CFDs, or contracts for difference. As a derivative product, CFDs enable you to trade shares, indices, forex, commodities and more, without ever needing to own the underlying asset. When you trade CFDs, you trade the difference in the price of an asset from the point at which the contract is opened to when it's closed. As you don't own the underlying asset, you can trade markets that are falling as well as those that are rising. So, how exactly do you trade CFDs? Each contract has a buy and a sell price. Sell prices are slightly lower than the current market price, and buy prices are slightly higher. The difference between the two is referred to as the spread. If you think the market will rise, you would buy. This is called going long. If you think the market will fall, you would sell, known as going short. The more the market moves in the direction you predict, the larger your profits. If it moves in the opposite direction, the greater your loss. CFDs are traded on leverage, which means that you only need a small deposit, known as a margin, to gain full market exposure. So, if you wanted to open a position equivalent to 500 Apple shares, you might only need to put up 20% of the cost. Your profit or loss is calculated based on the full value of the trade, however, which could mean magnified gains, but also magnified losses. So, when trading CFDs, you should always keep an eye on the potential downside. Take care to manage your risk with stops and limits. Visit IG Academy to learn more.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill. Whether you're starting out or just looking to level up, we got you covered. In each episode, we'll break down complex, easy to understand lessons, provide chart reading abilities, explore power, as well as guide you through hands-on examples to reach your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating carriers, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching Net of the Curve.
IG Academy. Now, today we're going to be looking at a way for you to be trading market turns. That's right. What is the trading strategy for profiting from falling markets? Well, that is going to be the opposite of going long, going short. So this is us taking through the process of going short. Because first of all, you're going to sell to open a short trade. And then you're going to buy to close it back, right? So I'll run you through that again. You're going to sell first of all, hopefully at a higher level, and then you're going to buy to close it back lower, all right? Reminder, sell high, buy back low. So it's the opposite of what you're usually trying to do. Now, there's no need to own the asset because you can go into the market and borrow it from somebody else. Because you can't sell something you don't own. So first of all, you need to borrow it from somebody else before you sell the stock.
That's it. For example, XYZ PLC shares at 1000p, and the steps are: you borrow 100 shares from a broker, you sell the shares for 1,000, the share price falls to 800, and you buy back 100 shares for 800 and return shares to the lender. This means your gross profit is £200 minus fees and charges.
Now, what are the risks of short selling? Let's run through those for you. There is the potential for unlimited losses, because remember, you're short something that can continue going higher and higher and higher. There's no limit on how high it can go. Unlike when you're long something, it can only really go to zero. For example, if you short 100 shares of XYZ PLC at £10 and the price rises to £12, that means that closing that trade is going to cost you £1,200. Your gross loss will be £200. Now, on top of that, there's the additional costs of commission, borrowing fees, and other transaction costs.
There are limitations to everything, including short selling. The availability of shares to borrow, being called away by the lender. There are also broker restrictions on short selling as well that you need to know about. Asset value thresholds and specific assets may be restricted. Different brokers also may have different policies, so make sure you really read the small print.
Now, there's some additional considerations to take into note. Dividend payments. As the short seller, you must compensate the lender for the dividends. Also, the buyer of borrowed shares receives the actual dividend. Okay, so the buyer will receive the dividend, but you as the short seller have to compensate the person that you've borrowed the shares from. In corporate actions, the short seller is responsible for any benefits that the lender would have received. So your relationship is with the lender, not with the buyer.
Now, did you know that short selling can be used as a hedging strategy? And also, some investors view high levels of short interest as a bullish signal. Some famous short trades that you might recall are those against Northern Rock and Lehman Brothers before their collapses.
I certainly remember those two.
Oh, me too.
So what are the key takeaways on short selling then? Short selling allows profiting from falling markets.
And the process is, as Rich said, borrow, sell, buy back and return.
The risks include unlimited potential losses.
And limitations also include borrowing availability and broker restrictions.
Short sellers are responsible for both dividends and corporate actions.
But it is an important tool for market liquidity and price discovery.
Thank you very much for joining us today on IG Academy, your guide to short selling. Right, welcome back to Trade Expectations. So we are looking at that robotaxi, all sessions opening for Tesla. Are we nearly there? How long have we got to wait to find out?
10 minutes, oh my goodness me. So 10 minutes, just showing you my chart, and I am looking for a dip, that's right. This is the daily chart here, 24 shall we call it. I'm thinking that we're going to have an initial dip, but what I quite like doing is that I buy on the dip because we're on air, and then I catch it on the way back up. We have some viewers, yes, that way I get...
Do you want to do a trade just between us before they open then? Because I think I'm going to be on the opposite side of you.
Depends on how fast you are, right? And also the thing is, you know, it's one thing for those of you out there that like taking a position before it actually hits the wire. So I know tons of people out there that like trading. I find it incredible because they have a position already before, like you said the other day, before the fantasy football players are named.
Mm-hmm. Yeah.
And they do it beforehand, they leave it. That's not my style. I kind of watch to see how it goes and then immediately try as fast as possible to make a decision and take a position.
As he says in Margin Call, you can be faster, smarter, or cheat. And neither of us cheat, so you got to be faster.
Well, unless you're my daughter. So my daughter's 9 and her favorite card game, cheat.
Is cheat. Oh dear, that's got to be a red flag.
You need to be on the ball when playing with that one. Woo. So I'm thinking perhaps just taking a look at my favorite 10-minute chart.
On Tesla?
On Tesla, because I think that nothing useful came out of that We Robot event.
So why do you want to buy them then?
Why not buy them? Shorting, darling.
So you're going to short first
Yes,
and then buy back.
yes.
So you're using this as an example of what we just talked about.
Yes, exactly. And so when it dips, I think it could go as far as potentially, 23 around there. And then I wait for the turn.
To 230.
Yeah.
So where do you think they're going to open? What would be your best guess? Because I taken that as a disappointment.
Yeah, that is a disappointment.
So this thing's not only going to, remember the options market was suggesting it should open
6%.
6 to 7%.
6%.
6 to 7%.
Yeah.
So that more like
So what, 6% below
220 bucks.
Yeah.
So the options market would suggest, now we're both assuming that it's a disappointment. Market might not have taken it that way, market might have loved watching this cyber cab. But I couldn't help myself. I had to put a position on last night.
You did?
The one stock that is my bogey.
I thought you said this was your kryptonite.
It is, but I couldn't help myself. The vol was so high that I had to have an options position on this. So I'll reveal that when it opens, and you can see how bad it's going to look I actually did one bullish and one bearish trade.
Wow.
Two different expiries.
Yeah.
But
So I'm kind of thinking maybe around there, right?
what levels are they? Tell me.
So 23, 29, maybe just above that. But you think it could go lower?
So hang on,
You were saying 6%.
But you're talking about shorting it on the open, is that right?
Yeah.
Okay, so that's...
You were saying 6%.
Yeah, but remember the stock's not going to open there.
I know it's not going to open. So yeah, maybe.
So the options market suggests if it's a negative, then it could open sub $230. All right, so 230.
So I need to go lower then.
Well, it depends. Is there a level that you wouldn't short it at anymore?
I mean.
And this is great. This is what makes a market, everybody, right? We're blind. We have no idea. Nobody really has an idea what Tesla is going to do here, right? But the options market suggested last night a 6 to 7% move today. So if those option traders are up and trading at 9 a.m. in the morning, then you would expect this to either trade 6 or 7% higher, which would be 240, what's 6%? That's about 15, so 255. So it could be anything between $255 down to $225. That is a proper, old market. When we used to get asked for a pre-market price, we get the sales trader come on, make me Rios in 50,000 pre-market.
Yeah.
You'd normally be allowed a sort of 0.5% spread, whereas we're talking about a 10% spread here.
For this one, I'd even put it on like the second chart. Some people like tick, but I even put it on a second chart. So there you have it. I've got, you can see a better illustration if I go into 10 minutes, but perhaps at 2, you were saying?
So it'll either open 225 or 255, $255 or $225 if the option guys are in control of this thing.
See, in that case, I would buy the bounce then.
So then you're talking about getting a bid in there at a very low level.
Yeah, I buy the bounce because.
How low would it have to be for you want to pick some up and take the chance that the lovers of Elon are going to get behind him and say, this cybercav, wow, 20 people in a robot driving down the highway?
At around 23908, 2390, around that level. So
remember, it's going to open, if the option guys are in control of this, it's going to open at 225.
And we're seeing
up to
strong,
255.
We're seeing strong from a technical viewpoint with strong appetite or 0.7 around there. So yeah, given the implied, does the implied volatility, does it change? Like, can you look at an updated one now? Does it?
No, because everybody's put on their positions yesterday. So this is option traders trading their delta of their positions.
Right.
So that's why it predicts that it's going to move 6 to 7%.
What was your? Are you going to tell us now what your position is?
I am. Yeah. Let me go to that. Just have a look back to August the 8th, and the stock was at 190. Right. I've worked off that 190 level being a base. So I don't think they go lower than $190. Guys, if you want to throw up my screen there, please, I'll show you what I'm talking about. So Tesla, $190. Gallery, you off for coffees? Throw up my chart, please. So 190 level. That's my break even on the downside, right? So I think that it goes lower, and this is, please do not listen to me in Tesla, guys, because I am terrible. I always lose money in this one.
I'm writing this down, 190.
So I think that if it goes down, then it won't go below $190. Now, That's what, 25%. So I have put on a trade that is taking advantage of that. And I put an options trade last night, if I can get this into vision. So it's buying a 220 put for October, so that's next Friday. So I bought a 220 put and I'm short three times the size at 200 level. So 1 by 3, so I'm short all the way down from $220 to 200, but the break even on the downside's at 190.
Right.
All right, so let's look at where it's about to open. Where is it going to be? Come on, Tesla.
Come
Show us your
on.
all sessions.
I think.
Let's get a countdown. There it is, 229. Boom. Right. So, I'm sorry. I'm going to sell a small amount there. 230. Right. So I'm short 30 at 230. I think that was a disappointment. I think it goes lower than that. I'm long the $220 puts, but I think we could see that today. I'm going to sell another 30 at 239. Watch it go up in my face now, up to 240.
I placed my deal.
You've got yours. What were you doing? Have we just traded with each other? Have we just gone? Shows you two-way.
I'm now up 142 pounds.
So you went short.
I went short.
142 pounds.
I'm now 192.
What size are you trading at?
I'm now 192 up.
Now remember.
Quick finger Ange. Now 204.
Remember, we don't want this to come across as a game or we're playing or anything.
Which is why my finger is on the close button. 229, 240.
So did we both go short?
230.
Jeez, be careful of your size there, Ange. That's...
No, but I'm going to close out. Submit.
You taking it?
Taking it.
You taking the money? My goodness. I bow to you.
There, you see? This is what I mean, people.
I bow to you, Ange. That
Look
is
at
impressive.
okay, so can you see? I took it off. Can you see my candle coming back up now? This is what I mean. You're not on. You have to be on that minute chart. You have to be on the tick, and then on the minute.
I'll get you the 10-second chart there. There we go.
Okay, I'm on the minute chart. See, it's.
I love this. You've traded so fast. I don't even know if the desk managed to get it into the actual market. You've probably just cost the desk $300. You better go and apologise to them.
240 was the highest, and by the time I clicked, it was 190. So there we go. Quick finger Ange. I hope you viewers like that. But that was really good. See, I was listening to all the implied probability.
Yeah, you were indeed.
So I'm just going to read that.
There we go. So Ange's play of the day. She's absolutely nailed it. So I'm taking a slightly longer view on this one. I'm long the 220 puts, but I'm short 3 times as many on the downside. I'm short 3 of the 200 puts. Therefore, I'm actually scared how bad that was last night. I'm scared this goes down below my low level of 200. So therefore, that's why I'm just shortened. I did 60 shares. How many shares did you do?
Victory dance yet? Okay, so I went cautious because belt and braces people. This was cautious. This was a cautious Ange call.
How was your size of your trade?
It was just one.
Oh, but that's 100 shares. So,
yeah, but it was.
Look at me messing around in.
Opened at
30 shares.
Opened at 22996, and I closed at 22803. Profit of 200.
Well done, you. And I think what was your on the low side? Where did you buy it back?
I bought it back at 22803.
Yeah, pretty, like as close to the low as you probably could have. Well done.
There you go. There's my chart, guys.
So, just remember, we're trading in size that we can manage. Don't go bigger because this one is going to be volatile today. This one is going to be super volatile.
And just a heads up, people, for those of you that are used to Tesla, and I get this all the time. It will get dippier from now onwards. And when I say dippier, if there's a technical term,
is that what they use in Chicago? Is it to describe it?
No, that's an Ange thing. It's a dippier. Like I get Frank looking at me, going, "What are you talking about?" I'm like, and it's like, "Is that in a book somewhere?" It's like, "No, it's an Ange."
I am proud of you. That's my favourite moment of the week. Is you just costing the trading desk about $300. Right, right, let's go. Do we have any comments congratulating you? Always bet against Rich with Tesla. Monkey Man is 100% correct there. Yeah, I am your Bob, as you like to call it. And yeah, if you've got no ideas, then wait. That is the boring trader. That should be my name. I like that, the boring trader.
No, I like boring.
That's the best way to be.
I am very boring. Ask Rich. I'm just like, you know, I like doing stuff that I know. That's why I don't touch Bitcoin.
Right. Did anybody that's watched the Tesla Cybercab preview yesterday, did they think it was impressive enough to have the stock go higher? That's what I'm interested in, because a lot of people have got this thing and you're trading at an advantage here, right? It is 9:05 a.m. Every American is still asleep. So we are trading ahead of what the Americans will do here. And that's the great thing about IG All Sessions, is you've really got that time advantage before those Americans wake up. Hence why I'm short 60 shares. You were short 100, throwing it around there.
But I wouldn't have clicked. I wouldn't have clicked if it didn't go that way.
Yeah.
You see?
Yeah.
So you're watching, and that's why I say, you know, for different financial instruments, you have to use different time frames. And remember I said to you that I was watching this one with the tick as well, and then I go to 1 minute, because that gives me an instant view of whether it's going to go down or not. And the key here, trader friends, set up your positions way in advance. That conversation that Rich and I were doing here about, hey, what's the implied probability? What's it doing
strategy.
now?
Exactly, yeah, that
Exactly.
was quite a good example of...
All that happens in the pit. There's nothing new here, people. All we're replicating is what people would be saying in the pit, like in SIBO. And then, you know, with that information that Rich is giving me,
226.90.
I'm then able to take a live position. And if it moved the other way, I wouldn't have clicked. And
just remember, so the options market was suggesting this would be down, would be up or down 6%, and it's only down 5%. So that's why I think there might be a little bit more to go. With all that excitement, I think we're going to have to go to a break, aren't we?
Yes.
Oh, no more coffee for you. We'll see you after the break.
You can find a variety of asset classes on the sidebar menu to the left of your platform. It's now time to pick an asset class. There are 4 major types. 1. Shares in individual companies listed on global stock exchanges. 2. Indices, a group of shares measuring the performance of a particular region, exchange, or sector. 3. Forex, the value of one currency compared to another, like the pound versus the dollar. 4. Commodities, like gold, oil, natural gas, or wheat. Decide which of these markets interest you and which you know the most about. It's up to you to research the market you'd like to trade. This will help inform any trading decisions you make. You need to know the risk of trading a particular market. For example, some markets react to events like economic releases. Next, look at the market's opening hours and how they'll fit into your trading plan. The deal ticket will let you know if a market is open or closed. Lastly, look at the costs and charges applicable. Once you're happy with your market choice, place a deal through the deal ticket. Options. A hugely powerful trading tool with a wide variety of uses. An option is a contract that gives you the right but not the obligation, to trade a financial market at a set price before a set date in the future. You pay a premium for this right. Options can have daily, weekly, or monthly expiry dates. Say you think the FTSE 100 is going to rise in the next week. Instead of buying the FTSE now, you purchase an option to buy it within the next 7 days. This is known as a call option. It gives you the right to buy the index at a set price, called the strike, before the option expires. If the FTSE moves above the strike at any point within the 7 days, you can exercise your option and buy for less than the current market price. If the FTSE drops instead, you can leave your option to expire, losing only your premium. But options aren't just used to buy a market when a market goes up. Put options give you the right to sell a market at the strike instead of buying. This can make them a great tool for hedging. Say you own Apple stock and are worried it's about to fall in price. Instead of selling your stock immediately, you purchase an option to sell it with a strike that's close to the current market price. If Apple stock drops, you can exercise your option to sell, preventing losses by selling above the current level of the market. If Apple stock rises, you can keep it in your portfolio, again, only losing the premium. You can also use options to speculate on price movements without ever intending to buy or sell the underlying market. That's because an option premium will change over time, depending on how likely it is the option will become profitable. If you purchase an option with a low premium, you can sell it on if it becomes worth more as it nears expiry. With IG, you can trade an extensive range of call and put options on shares, indices, forex, and more.
Welcome back, everybody. It's our Friday live from the trading floor. Very happy to have Martin Harris join us. Martin, please introduce yourself to the viewers.
Thanks for having me, Rich and Angeline. It's been a while. I've been waiting to join you guys. Really, basically, I've been part of the non-leverage team at IG, and more specifically, I run the IG Smart Portfolios. So that's our long-term investment product that we make available to all IG clients. And we work with BlackRock to build 5 risk-adjusted discretionary managed portfolios, all the way from a conservative cash-like yield through to our portfolio number 5, which is our aggressive portfolio, which is really equity-heavy. And these are actively managed passive investments. So we're looking to give a market-like exposure whilst reducing the level of risk through some sort of tactical diversification. And you can find those on the website, and you can see all of our historical returns there.
Martin, I'll be putting the website on our live chat as well, because our viewers are all asking questions about the Smart Portfolio, how to find it. You also recently talked about a new product feature. Tell us a bit more about this, and I heard it's a stock screener.
Yeah, so for all of the clients interested in trading equities or investing in shares, we've got a new product feature that's been demanded by our clients.
I think
so
Rich
you can
has got it
find
up
that,
on its screen.
Great. So you can find that on the platform. In that left-hand tab there at the bottom, we've got a new stock screener, and it's provided by TipRanks, which is one of our sort of technology partners. Some great features. So we've already got the TipRanks Smart Score built into the platform. So when you open up a particular stock, you can see a aggregated score from tip ranks across a number of different factors.
Wow.
And then now we also have the stock screener. So if you're looking for particular stocks, you're looking for stocks that are, it builds in a earnings calendar as well, which is great. So you can see what stocks are happening in the upcoming earnings, and then you can also filter them for things like dividend yield.
Okay, shall we do
it
it live on air here, Martin? Let's go. So price target upside, run me through, well, any.
Right, so I mean, look, so what they've got is this is a tip ranks tool, and so they aggregate thousands and thousands of analysts' estimates. And so what they do is they give an aggregated smart score, which is just sort of their criteria around stocks that have the right sort of upside based on insider trading, based on signals from the market in terms of if analysts have a consensus buy, as well as investor sentiment, as well as volume tracking, lots of buying. So what you can do is you can start to filter that down. And so, for example, you've now got UK stocks listed there. What you can do is go to either price target upside, so that will be based on what analysts have suggested, or you can go to dividend yield, find stocks that have the highest dividend yield, and then it will just start to filter it out, and then you can start to see which sort of stocks might meet your criteria.
Oh, I love this.
Rich is repositioning his pension as we speak.
This is my dream. I wanted to have this when I was in...
Fund managers out there, your job's gone.
In the hedge fund, yeah, exactly. And so when I was down in South Africa, I actually used to do this for the South African top 40, and I used to do my own. I had 10 different sections and would score each stock out of 10 and then come up, and it was brilliant.
Did you do it on one of those huge crazy Excel spreadsheets where it's
back of an envelope,
multiple tabs
literally, but it didn't even use a computer for it. It was so this is just, this is incredible for me. I'll be at this all weekend.
It's a great feature, and what you can also do just next to the flag where it says select columns, you can go and choose what else you want to include in that kind of sheet view that you have in the main part of the screen. So selecting PE ratios, volumes, and so on. So you can choose what's important for you, and then you can filter, top down, bottom up, you name it, ascending, descending, and find the right sort of stock. So this is a great place where you can now find opportunities for investing as well as for trading. So things like, if you're looking at ways that you could use this, you've got earnings calendar in there, then you can go and you can find which stocks are on hedge fund signals or have a strong analyst consensus, and then you can look to potentially buy dips there or sell rallies if it's got a negative view.
So I've just put in my top the things that I think are important to rank. And let's not comment on what it is, but that is not done intentionally. I promise you.
Bias number 2.
I'm not a holder. Let's not even mention it because I don't think we're allowed to. Let's get rid of that one.
Rio Tinto, one that you already trade.
Yep, Rio's up there. Imperial Brands. So I've basically put in well, you can see it there. Price target upside. That it does have upside. Analyst consensus, strong buy or moderate buy. The best analyst consensus, strong buy, moderate buy. Dividend yields above 5%. It's fascinating. Martin, thank you very much. Anyway.
Yeah, exactly. So then you can then take this and then go and, take these stocks, put them into your charts, see what if there's, if you are a momentum trader or a trend trader or something like that. And it just adds another layer of analytics for you to use.
Can I put PE ratio? Can I say PE ratio under a certain amount? No, I can rank it by PE ratio. Okay.
Monkey Man is asking whether it filters momentum.
Whether it filters momentum. I'm going to have a look, but this is still the first iteration of our stock screener.
Oh, there's you might have just added to it. There you go.
Yeah, that's a good one. Thank you, Monkey Man.
Things you'd never thought you'd say on IG Trade Live in the morning.
That's why I needed to be here.
Excellent. Man. What are you thinking of the market at the moment, coming into earnings season, Martin?
Exactly. So earnings season is really what we're looking to drive things at the moment. There's a lot of noise in the markets. I think we saw CPI coming in a bit warm yesterday. So potentially not strong, not bullish for ease. I think rate cuts, 50 basis points of rate cuts have now been, the probability of 2 cuts for this year dropped to 88% yesterday. We still think that 25 basis points is on the table for November. We've got a lot happening into November. So the if the rate cut potentially doesn't play out, as besides earnings, we've also then got what happened earlier in this year. What was the playbook around the higher for longer view, which was momentum in the mega caps, and it was then we had a lot of friction for that rotation to small caps.
Yeah.
So what we're waiting to see is with earnings, if that rotation to small caps and value still plays out. So really the view that we are looking at the moment is, I think it's XLT is the consumer index in the US. So we like a buy on XLT potentially, as well as buying software instead of hardware. So we're looking at all of those earnings from the software sector in November to see whether that kind of rotation from hardware in the AI play, which was really semis, as well as anything to do with server farms, and move towards software, IT services, things like that in the small and mid-cap space.
Do you have a year-end price target, Martin, on the S&P?
He's asking because he's just turned bearish. He's just turned bearish today on US stocks.
So our view, and we speak to a lot of when we're sort of being on the buy side, we get a lot of analysis. Also working with BlackRock, we get a lot of analysis from them. I think the view at the moment from that side of the market is that the election is going to drive a lot of movement in S&P 500. We're expecting things to actually be positive on either on that coin toss of a Trump or Harris win, and potentially that might combine decent earnings season combined with a strong result in the election for particularly for a Republican win. Might see a blow off top. I think that might be the high of the.
Oh, I hate those words.
Of the market.
I hate those words because that's a 61, 6200, isn't it?
Yeah. So that's sort of what if you wanted to really put me in a corner, we're bullish on S&P, but with a lot of volatility and a lot of noise around the election.
Any chance of the FTSE catching up at any point?
We would absolutely love that. I think for UK investors, what we have seen is that BlackRock have put UK underweight. So if you take a look at sort of their mutual funds, model portfolios, even for a UK investor, they've really, they talk about a hometown bias. And so the average UK investor has too much exposure to the FTSE relative to particularly emerging markets.
Oh, wow.
Besides going just S&P 500, there's a lot of opportunities in, at least the BlackRock view is a lot of opportunities in EM, as well as corporate debt.
Cool. Martin, sorry to disturb you, but we have a viewer just messaging right now, listening to you, R. Saxena, asking, is there a ranking, Martin, on sectors and industries? Well, industries.
Is that? I'm guessing he's talking about that stock screener.
Yeah, that's right, yeah.
All right, thank you. I will go and have a look at that, and that's a new feature.
Just checking, does that mean does the question mean can you rank what the favourite sectors are, or to only take stocks from that sector or industry? I'm guessing it's the latter.
I don't have it in front of me, so I'm going to have a look, and then what I might do is get into the chat later. And
that would be great. Sector, there is no. Sorry, let me answer that for you. So if I was just going to talk financial and and let's say utils.
Brilliant.
So the
Basic
way I
materials.
interpreted that is maybe can you rank them from like upside, sort of like bullish to bearish?
Yeah. I tell you what would be really wonderful, Martin, and I don't know whether our developers can get to it really quickly, because I'd love to see this. But wouldn't it be great, Rich, if we had a button for hedges? So if you, let's say, I traded Vistry early this week, but I wanted a hedge, I wanted a pair.
We're getting into proper hedge fund
Ah.
territory now, because that's exactly what happens. Yeah.
So you
It
know, like
suggests the best hedge.
oil, then it suggests the best hedge. So airlines, right? If only there was I've looked everywhere and I still haven't found a hedge filter. There you go. Heard it here first. Have you ever seen one anywhere, Martin?
A hedge filter?
Yeah.
No, but
So, like-
if you trade pro real time, it does do pairs trading for you, and it shows you the ratio between the two stocks. So then you can trade like the statistical pairing between the two, and so as soon as there's a divergence or convergence, you can then, so it's a typical one would be trading a, telecom, so you could trade like Vodafone against BT. But a
Excellent.
hedge ratio that then it's or a hedge pairing finds you. So, I mean, yeah, for like airlines, you would then oils, then where you want to hedge your bets.
How nice would it be if we had a button?
A hedge suggester.
There you go.
I like it. Okay, fine.
which-
I like it. I'll chat to our product team about that.
Martin, sorry, what was it you were mentioning? Where do people find that on the website? The one you mentioned?
Which one? The pro real time, or
Yeah, that you just
or
were
the-
talking about a second ago there, that you can see the relative.
yeah? So there's a third party platform called Pro Real Time, which is the advanced trading tools from IG. And what you do is when you're inside your My IG and you're opening up your platform, you can choose to either open the web trading platform where you are, or you can add Pro Real Time. It does come at a cost. If you are active, and I think it's on the platform, $4 a month, IG rebate that platform for you, and there's no cost.
God, that's great.
But that's a really powerful trading tool. It does some really interesting stuff. You can automate your trade, and it's simple to use, so you don't have to understand coding in order to use that platform.
Martin, 30 seconds ago, what are you doing this weekend?
This weekend? No idea. Thanks, Andrew.
No-
I'll have to
no
figure that
rugby
out.
on?
But today, later
Is he
today
not
at
the
IG, I'm
fairest
going to be in the
South African
office
you've
dealing
ever
with Teach
seen?
First.
He is
We've
the
got
fairest.
You're going to be here for the Teach First
yeah,
as
there's
well.
going to be the inner city school kids
amazing.
coming through to the office.
Fantastic. Yes, they're going to be here at, in the studio with us at 11.
All right, I'll see you there. Yeah, I was supposed to come in today. Fred told me do it from home, so here I am.
Listen to Fred, or he'll whip your ass.
Excellent. Thanks so much for joining us, Martin. Come back after the break for market measures. We're going to look at, is there an arb between the SPX cash and the futures? So yes, straight into that. We are looking market measures today. There's the SPX cash, but then there's also the ES1s, which is the futures. Now, is it normal for the S&P cash to be trading cheaper than the futures? We're going to look at everything that goes into that calculation. So the S&P 500, the most popular index watched by investors around the world. There's multiple underlying instruments that closely track it, including the S&P index itself, the spiders, that's the ETF that have been around since 1991, the very first ETF, and the ES futures, right? So always remember it's /ES. The SPX and /ES are priced very similarly. The fundamental difference is that SPX is a cash index that cannot be traded, right? So that's just the level, that's just the indication of where the S&P 500 is. Whereas the ES represents the E-minis S&P 500 futures, which is tradable. So there's the large futures, which you don't want to go near because they are scary big in size. Everybody, even the professionals, so for the last 20 years, I've been trading the E-minis. So that's the S&P 500 futures, which is very much tradable. Now, as of October the 8th, the ES is trading at a premium to the S&P 500. That's roughly 47 points higher. This raises the question, do the futures always price higher than the underlying, or is this an outlier event? Why does this discrepancy exist if both track the same basket of underlying assets, right? Is there an arbitrage there or not? The price as of the 8th of October, when Sahil was good enough to put this together for us, was 5751 for the cash, 5798 for the futures. Now the difference represents the cost of carry, right? The cost of carry, which is priced into the futures and includes dividends on the S&P 500 stock and the interest rate cost to finance the portfolio of the duration of the futures contract, right? So there's a whole heap of things that go into the calculation of the difference between the two. And there's even one of those beautiful equations that we love so much to demonstrate that.
It got me so excited. I thought, because Rich never allows me to front run this chart because it's always, you know, more interesting.
Very protective of this information.
Yeah, but it's good because it always gives me sort of like excitement when I see it for the first time. But I thought you were going to say, Ange, there's a heat map.
There is no, well, let's start with the equation, right? Because the futures trade closely to the expected SPX forward value at settlement day, the formula for the futures is as follows. The S&P times E to the power of R minus Q times T. Now, the R minus Q is, of course, the risk-free rate. So let's put this into language we all understand. Those non-mathematicians out there. The risk-free rate is the interest rate. So you take the dividend yield from the interest rate, i.e. how much are you earning for holding the share, but how much are you having to pay to buy the thing in the first place. So you take the dividend yield from the risk-free rate and then, of course, multiply it by the time until maturity. So this gives us whether the futures trade at a discount or premium to the cash depends on the relationship between the interest rate and the dividend yield. If the interest rate exceeds the dividend yield, the futures will likely trade at a premium. Read that again. If the interest rate exceeds the dividend yield, right? And this is why there's a really important relationship. A lot of people watch when that interest rate crossed that dividend yield in 2022. This was an important moment. And the dividend yield, of course, as higher the index goes, the lower the dividend yield becomes. So when rates, which were going up and just started coming down, exceeds the dividend yield, the ES futures will likely trade at a premium. On the other side, if the dividend yield is higher than the interest rate, so back in 2020, 2021, then the futures trade at a discount. So we've seen actually a really big change in the last couple of years. Now, do you like that one?
I like that one. I like the very helpful. Thanks, Baby Shark. I like the helpful oval and circles as well.
To give us those, there's the 4 major periods when the futures have priced higher than the S&P cash, right? So in the past 30 years, he's gone back to show you exactly when the futures have been priced higher than the S&P. So which gives you a wonderful representation of the movements of interest rates and dividend yields as well. But look at where we are right now.
Grief, yes.
And that is because of that low dividend yield.
It's like my heart after having to watch Vanilla Sky.
Or trading Tesla.
Yeah, or trading Tesla. I feel dizzy.
Now, these periods coincide with times when the Fed increased interest rates, confirming that fluctuations in rates play an important role in creating discrepancies between the futures and the underlying cash. In June 2022, the Fed announced a shocking 75 basis point interest rate hike for the first time in almost 3 decades, which immediately resulted in an increase in the futures to cash spread. All right, there we were. That's when we went from discount to premium. And it actually stayed, level for a long time.
Was that immediately? I'm just looking at June 2022. Was that after the third lockdown or fourth lockdown?
I don't know. I was in New Zealand, so we didn't really do lockdowns.
Nice. Good for you.
So you see that subsequent, that huge bounce there when we got the even bigger rate change in rates there. So here's the stats showing the percentage of times that the futures are higher than the cash. These results are consistent with our previous discussion. However, since the Fed has started reducing interest rates last month, 6 weeks ago, and is expected to continue to do so, we may observe a tightening of that spread in the future. So over the last 30 years, the times that futures trade higher than the SPX are 54%. Since 2008, only 28%. However, in recent years, it has been 85% of the time.
Wow.
What are the takeaways, Ange?
So the underlying and the cash, well, in this case, the ES, the SPX, both represent the S&P 500. But they can trade at slightly different prices due to the cost of carry in futures trading. The gap between these two prices is also influenced by the relationship between interest rates, like we saw in that chart, and dividend yields. However, this gap does not necessarily indicate arbitrage opportunities, as everything has already been priced in. As someone who looks to technicals for confirmation, I really like this last sentence.
Excellent. So that is our last market measures of the week.
And
it's been a great week of them.
I've just looked it up. Biden signed into law a resolution terminating a national emergency due to COVID, April 2023. So that would have preceded, that 75 basis point cut would have preceded the, they were still in dire straits. We were all in dire straits, except for Rich here, wandering around freely in New Zealand.
Mountain biking, sailing, house parties.
I'm not going to make a sign at you because it's too rude.
God bless you, there are.
9:36 in the morning. But whilst we're talking, time producer Fred for an amazing arbitrage trade.
Ooh, tell us all.
And it also has
This is not advice, obviously.
This is not advice, but it also has a link with France, Paris. So listen up, people. Still to date, the best arbitrage trade I have yet, and this is like knowing quants, knowing people in, banking, fund managers, traders, right? The best arbitrage yet. Although it's been dented slightly.
Long and short writ.
Should we make a t-shirt like that? Is the Birkin arbitrage trade. Do you know the Birkin arbitrage trade?
No, I've never heard of that before.
Unfortunately, it's made less positive in arbitrage trade, but still works, right? If you do that journey. So this is the best-selling Hermes bag of all time. Here we go. If you whack up my, okay. So this is the Birkin. Doesn't look like much. 29,000.
Whoa,
perfect Christmas present for producer Fred's wife and also Rahel. He's going, oh yeah, in there. Okay, so hear me out. Arbitrage trade is just simply understanding where you can get the same thing or the same similar instrument, but at a higher price somewhere else, but trade it because you know that you can get it for a lower price, right? And trading that spread, if you like. This spread for the Birkin bag pre-Brexit, just follow the conversation, I'll get to it, was you could make 10K, and guess where it comes out first? It comes out, the latest models come out in Paris and London. Fantastic for us Eurostar people. You grab that bag, you go on a flight, head to Southeast Asia, anywhere in Asia.
Back to where it was made.
And you will get, I tell you, something like 20% return. However, due to Brexit, we no longer have the VAT return.
Ah.
Right?
Right.
So now everyone comes here, every tourist has a look around Harrods, Selfridges, and then they sod off to Paris and places like that to go and actually buy the product.
Right.
Because we no longer offer this VAT back.
Yep.
So that's why the arbitrage trade for the Birkin bag is slightly damaged because of that. Thanks, Bojo. But if you can trade this, is still, to date, the best arbitrage trade out there.
And there's nothing I've got to follow that. So I'm going to have to go on to the next section of What's Next, which we're going to talk about all the things coming up, not just in the earnings season today, but also next week.
Hi, I'm Sean Mearson, Senior Market Analyst at IG, and join us for our new show, Charting Essentials. That's every fortnight on IG.com, our trading platform, as well as YouTube. And that's a show where we look at everything technical analysis, hoping to help you upskill, whether you're starting out or just looking to level up. We got you covered. In each episode, we'll break down complex concepts into easy to understand lessons, provide practical tips to help you sharpen your chart reading abilities, explore powerful technical indicators and their real-world applications, as well as guide you through hands-on examples to reinforce your learning. So come, let's work on our skills. Let's get better at this. Let's accelerate that trading journey, learn to have confidence to trade, and make informed trading decisions.
Welcome to IG's Charting the Markets, your gateway to expert technical analysis and market forecasts. Our video series breaks down the complex world of technical analysis into three key asset classes: indices, forex, and commodities. Watch as IG's expert analysts dissect charts, spot trends, and provide actionable insights. Whether you're tracking global indices, navigating currency pairs, or exploring commodity markets, we've got you covered. Sharpen your technical analysis skills and make informed decisions. Join us for Charting the Markets every week in IG's trading platform and on IG.com, where data meets clarity. Start watching now and stay ahead of the curve.
Fundamental analysis is a method of evaluating assets to assess what their prices should be. It's based on the principle that every asset has a real fair value, which may be very different to its current price. It assumes that markets will naturally correct to reflect these fair values over time. The aim is to discover assets that are currently underpriced or overpriced, then place trades to profit from the expected correction if it materializes. Now, unlike a technical analysis that focuses on price charts, a detailed fundamental analysis would look at everything that could drive future price movements. The technique is most commonly used to scrutinize the price of shares, where annual reports, industry trends, and a company's management team may form part of an overall assessment. However, fundamental analysis can be used to review the price of an asset. A commodity like oil, for example, could be evaluated on the basis of economic data, regulation, brand recognition, geopolitical factors, and technical specification, among other factors. But while fundamental analysis is often said to be more comprehensive than technical analysis, it may not give you the full picture. For one thing, it's generally only useful for identifying long-term trends, whereas a technical analysis can help find short-term opportunities. For this reason, it's often a good idea to combine elements of both types to get the most accurate view of a market's direction. To learn more about fundamental analysis, join IG Academy today. It's completely free, and gives you access to dozens of trading topics.
Welcome back, everybody. So you just saw the advert there for Tom Sosnoff's live events.
I can't wait. It's going to be in quite a few locations, right?
It is. We start off in Edinburgh on Monday the 11th of November. Remember, these are all free entry, free tickets, but you've got to get your tickets. So sign up right now.
Don't have tickets, don't say you know Rich and Ange because you ain't getting in. So please have your tickets ready, because we don't want you to be there trying to fill the online form in, right? So just do yourself a favor, do it early, and then hopefully you'll have, not over-promising, but I did say to many people that asked that I did tap Tom Sosnoff to say bring more of these books, because, you know, they gave them away free last time we did this in the summer.
And you've also got Birmingham, Manchester, London, week of November 11th. He's on the road show. He doesn't have a night off, no night off. He's every night that week. He is trading live with the US sessions. Now, to sign up for the tickets, you're going to have to go to tastylive.com in the events section, and you'll find them there. You've got to sign up, get the tickets, and also on Eventbrite you can get them as well. So that's coming up in a month's time.
He is
sign up for your tickets.
Hardcore, you know. I don't know how he does it, because he genuinely doesn't need any sleep.
There was, if you just fill for a second there, Ange, I'm going to get up an article on Tom that was in the press.
Huge week, as we know. I'm really excited because I like trading earnings, and I think Rich does too, because he's a fundamental kind of guy. But we've got JP Morgan, Wells Fargo. For those of you that don't know this tab yet, it's a very handy tab right at the bottom here on the left-hand menu, and it says economic calendar. If you hit that up, you'll find this handy list of earnings, and I like tabbing through yesterday, today, tomorrow, but it's the today one that I'm looking for, and they've helpfully put in red those of high importance. So JP Morgan, Wells Fargo, Bank of New York Mellon, all before the open, but it's the next week which we see this party continue. We've got just taking you through just the American ones. Yes, it is a belter of results. We've got United Health, Johnson & Johnson, Bank of America continues that banking earnings party, Goldman Sachs as well. One of your favorites, Rich, when it comes to talking about downgrades and upgrades. BlackRock, Citigroup, Charles Schwab as well, and United Airlines is one of those. For Monkey Man and Dales, here we go again. We've got Tesla, October 16th.
Now, I am watching that that Walgreens Boots number. That's Tuesday. So Walgreens Boots Q4 on Tuesday. There was a big article on the in the Sunday Times about them last weekend. So I've got a small bit of those in my pension.
Why do you have it in your pension?
Because can I just say that the stock's gone from 60 to 8.
I hate Walgreens Boots.
So I love it. I don't know how you can say that. How do you go on holiday without going through a Boots? At the airport, I don't take anything with me. I go into Boots when I get to the airport and fill up the suitcase. Actually,
Rich has a point. He is one of those, isn't he? I noticed yesterday as I was marching and trying to get him to the globe, he's the guy that's right at the back, and I'm kind of like, where is he? Oh, he's at the end. He's like happily going around. And so, trader friends, if you're traveling with him, he's the one that's going to be at Boots whilst you're boarding the plane.
I think I spent probably £45 in boots because I obviously don't have a check-in, just got the carry-on. And so that's one reason. And Walgreens is an incredible place in
I don't like their
in the US
setup.
as well.
I just think it's too busy, it's too cluttered. I can't find what I'm looking for.
That's the boots. But Walgreens in the US, they're massive.
Horrendous.
Absolutely massive.
I'd not go in there if you paid me. Netflix. Netflix, not elitist, but I'm telling you, Caleb, it's like a nightmare trying to find anything in there. Netflix out next week.
Thursday, so that's a market Thursday.
Freeport McMoran, one of the ones that you trade, also out in the coming week. And if you want to continue on with the macro, I'll punch up the European ones.
Excellent. Yeah, just let's break quickly to my screen. Why pro trader Tom Sosnoff says to bet on yourself instead of passive index funds. So you can find this on Yahoo Finance. If you search for Tom Sosnoff Yahoo Finance, this was an article on him yesterday. Excuse me. Now, the quote that I liked. The problem with passive investing, Sosnoff explained, is that when you start passive investing when you're young, you close your eyes, you take a nap, and you wake up and you're 60 years old. You don't know how markets work. Passive investing breeds complacency, and it potentially deprives the investor of an education in risk management, market mechanics, and decision making, which is exactly what we're here for. It's why Tom and the guys are still on television, after 20 years across there, because we just think that risk management is important for you to learn, market mechanics, decision making. You can use all those in your everyday life as well.
Also, if you do passive investing, you'll never ever, and I can tell you that because I've used them before, you'll never ever get a fund manager tell you, well, I've got a confession to make. So I have a confession to make. Normally I'm belt and braces, but in the last 2 years, I have actually, Rich confirmed my take on it. In the last 2 years, because I had so much conviction in AI, I did choose some specific AI names and NVIDIA, done. And just went kind of all or nothing, because I think I'm not going to be this age. There's a saying. You're the youngest now that you'll ever be.
Yeah, like
right?
that one.
So I am not going to be in the position to be able to take that bet, if you like, 10, 20, 30, if I live that long, years from now. So that's why I did that. But
not on that you're talking about investing, not trading side. You're talking about long-term responsible investing, right?
Exactly. But like I keep telling Rich, when it turns cold, like now, the moment I know I start feeling like, oh, I would like some marshmallows in my hot chocolate, I know that that's the time when I tidy up. But stop laughing. You guys do it too. You do. You see laughing. You then think, or I think, that's the time when I rejig my portfolio. My long-term portfolio. So I'm going to take stuff off the table now. Obviously, it's not going to be like, well, if you invested all your money into every single company that's in your mobile app, right?
Front page of your
front page. Yeah. So it's going to be different from that. So I agree with Tom. I mean, I like to, if I failed in a trade, then it's on me. But if I did well on a trade, then it's also on me. And how do I reposition that position?
Yeah, very much. Right, so we were talking about numbers in Europe next week from Page Group. We got a trading statement on Monday. UUs, I thought it was this week. We've got
BAE Systems is that was this week, wasn't? No, that's November. Oh. Goodness, ahead of myself.
Okay, but let's jump to the macro. So, macro next 7 days. Excuse me. Of course. Well, first of all, you've got PPI today, right? So US PPI today, and then next week we've got some inflation data out of China, which will be important going into Monday. You've got a speech from Waller on the 14th, And then we've got that UK unemployment. UK unemployment coming up on the 15th. And yeah, it's going to be all about earnings next week, really, isn't it? We don't have too many numbers in the US at all.
In terms of the ones that, well, I personally trade, I think you've got a position on it as well. Luxury does feature in the coming week. We've got LVMH, Q3 sales on Tuesday. We also have those who, and our investors and traders love UK house builders. We've got Bellway, full year numbers. Also look out for Boohoo and Reach. On Tuesday, out with a trading statement. Rio Tinto operations review. I like those because it gives me oversight on production. Whitbread, Jamie, is your friend Jamie looking out for Whitbread first half numbers on Wednesday? Did you tell Jamie about our walk to Shakespeare's Globe? And he said, Beefeater. I said, what's next to it?
That's right, yeah, the Premier Inn.
Premier Inn, there you go. And then Travis Perkins, BHP, Persimmon, also Smith's Groups, they joined the party, and Nestle as well a little later on in the week. And as it always is for earnings season, it then quietens down on that Friday after reaching a fever pitch on Thursday. But we still have Procter & Gamble and American Express and Intercontinental's trading statement on Friday.
Yeah, the only macro's pretty quiet in the US until Thursday when we get retail sales and industrial production. Still not really what I would call tier one, but retail sales probably the most important number of next week.
Any of you trading Intercontinental out there? I've had a few Twitter nudges already. Really like the stock, really like the way that they are, in the market. They've gone with the Intercontinental or IAG Light strategy. Have you heard about that one?
No, I have
Which
not.
I think has done the company very well, given it's well timed. So instead of owning the property and owning the land, they decided 10 years ago to go for the IHG Light. So they have huge franchises and big chains that they have bought through acquisitions, but they lease out those brands and the strategy, but they don't own, they don't buy the actual land itself.
Right.
And that gives them agility and the ability, thankfully for them, during COVID, to be able to contract and according to demand. Had they owned the land and had to get rid of that would have been really difficult for them. But this strategy was spearheaded by the ex-CEO David Solomon.
I don't like them.
You don't like them?
I
Why?
do not like, because if you go for a beautiful walk in Budapest and you hike on the Pest side of the river, it's an incredible view back to Buda. But there's one hotel with massive neon letters, Intercontinental, and that's the one thing that spoils the whole view over the whole of Budapest. It's a stunning city. Was there for the World Athletics Championships last summer. Yeah, so for that reason, I'm out.
I'm just trying to show our viewers the site that you are describing. Is this the one? Is that the one?
Does that, if that's got Intercontinental written all across the side of it, can you get a zoomed image of that?
Is it that one with the big dome?
Well, I mean that is the view, but you'll have to see if you can find one. They probably hide it in the pictures because it's so ugly. Anyway, let's take a look at what's going on with our with our latest moves. Has Sainsbury's recovered? It's still down 4.5%. Still down 4.5%. Reckitt's down 1, Tesco down 1, Burberry down 1. In the European markets, what are the fallers there?
So Saga, after the blip They have, as Rich is putting up his European chart, this is why I like the 10-minute chart, Rich. And a lot of people laugh at me. Why do you choose 10-minute, Angelina? You mean you could be 15, you could be like, you know, an hour. I like the 10-minute because it works for me.
It was up 16. What's it up now?
It was up 16, and then it's now come back off. And let's take a look.
The top left-hand corner, it tells you the blue there.
Up 9%.
Great, good,
yeah.
Good trade.
So there you go. I waited, and not a huge profit, but profit nonetheless. I came out because I had stops in place, and I just cleaned it and just got rid of it because I did a short. So I got £7 for that. Just quick in out.
Turned up, cleaned up, as my friend Mr. Vachev says.
Turned up, clean. I don't like
TUCCU. Turn up, clean up.
I don't like leaving anything on the table because, you know, Rich might lead me astray.
This table's a mess.
He normally
I don't
does.
believe you. We've still got stuff from last week on this table.
Let's get to the movers as well, because we have some people asking, Ange, we saw you scribbling on your hand whilst Rich was talking. So
that's right.
they want to know.
We talked about Barrett's being the best up. So Barrett's up 1.2 in the day, Whitbread up 80 basis points, ITV up 60, Airbus in the Europeans up 1.5, Porsche up 1, and RWE up 40 basis points. Quick look at Tesla before we go.
Hey.
Where is it? Where is our Tesla trading? So we thought it might be down nearly 6, and it's down 5.77. The options market predictor wins again.
Yay! And the Ange fast finger short wins again.
So, favourite most moment of the week, Ange?
That was it, I think.
That was it, definitely. What a way to finish a Friday, everybody. Best of luck for your trading today. We'll be back next week.
And
exciting shows next week.
I think Monkey Man's trying to win the prize.
Oh yes, what was on the hand note?
Well, Rich ran out, and the director's note, he ran out to have a wee. But did he remember to turn off his microphone?
Yes, I certainly did. That was when I was filling my glass with water.
So it wasn't everyone in here was like, what is that sound? So on my hand it says, remind Rich, we. On that note.
Thanks everybody. Have a great weekend. We'll see you Monday. Peace out.
Stocks, they churn. Claims they're up. CPI, it's a bit warmer. What does it mean? It's Thursday. It's October 10th, 2024. This is Overtime. I'm your host, Chris Vecchio. He's Ilya Spivak in San Francisco. We have Dylan Radigan and Milana here to take you through the next 30 minutes of this show because it is Thursday, which means the prediction trade is coming up next. Dylan will be sticking around as we chop up the latest news in markets and politics. Why are Trump's odds surging these days? Does it have anything to do with DJT? Make sure you stick around for that. But before we get there, of course, join us. Tell us what you're trading today. Come talk with us on YouTube. Likewise, come over to tastylive.com, see what we're about. You have to forgive the voice. Ilya is sick. I was at the Mets game last night. Dylan is the only rational, sane-sounding person here. But we'll get through it. We can do it. We've done worse, and better people have endured worse things, as it were. As we look to these markets today, claims jump up unexpectedly, perhaps related to the hurricane, although there are rises in claims in places unrelated to the hurricane, like in California. We see that inflation, while making further progress year over year, it does come in a bit warmer than anticipated, and as a result, bonds have another rough go of things. The bonds perhaps having a rough go of things because oil decides to just turn around for a near 4% gain today, 3.69% higher on the session. Energy products well bid across the spectrum. Gold, silver decide to take another jaunt to the upside, perhaps they're basing. And the dollar, for all of its warts, it continues to move up. The euro, the pound look particularly sick versus their greenback counterpart. But guys, we need to make hay while the sun shines. 24 minutes on the clock. We are running out of time here on overtime already, so let's just get to it. Go to the charts. It's a inside day of sorts for the S&P. 5827.5 right now here. It's a loss of 0.24%. Similar for the NASDAQ, off by 0.2. The Dow Jones is off by 0.18, and the Russell hit harder than other things, but off the lows considerably. Was a loss in the neighborhood of 1.5% earlier. Now down by 0.67. Dylan, you said that you saw revisions coming lower to this jobs report down the pipeline.
I think that's the risk. I just think that the risk here, because the typical thing with that number is a down revision anyway.
Except
I think the risk that you're speaking to, though, is that you get a window, an opening of a window where you can peek through and see a nasty combination of data down the pipeline where inflation's a little bit firmer while the labor market's weakening. Dylan, why is that a concern for you? Why don't you like that mix of data?
Well, I mean, I think I don't know why anybody would like that mix of data, which is that the Fed is cutting rates, that the labor market is softer than everybody wants to believe, and inflation is, persistent. I mean, that is the thing that forget the markets for a second. It's the thing that human beings don't want. I still think that the S&P's sort of behavior is inherently perplexing, especially relative to the CPI today, which we talked about yesterday, Ilya. I mean, it was not a number that sounded the all clear on inflation, from what I could tell, and so I just think that that the risk is a weakening economy with persistent inflation in going into a rate cutting cycle.
Interestingly, the ISM services sector survey that we got last week, which we've talked about, 19-month high on economic activity, it kind of had the read-through on this, because the one part of that survey that was really weak was employment growth. And that obviously clashes with NFP. NFP was very strong. Not only was it strong, but for the first time in a while, all the revisions were up. The July number was revised up. The August number was revised up, and not by small amounts, meaningfully. So when we look at this, we go, wait, which one is it? Are we looking at basically now a downside revision to September's number because claims are much higher? At least initial claims absolutely surged when we looked at today's data in the last week of September. Maybe it's episodic, who knows? But continuing claims are also up, and both of them punched up through their 4-week averages, through their 12-week averages. So not good data. Tough to say which the markets are going to care about, but I think the bond market had it figured out. Whereas stocks were seemingly confused, bonds seem to know what's going on. Because yields are higher, break-evens are higher, the yield curve is steeper. All of this is reflation. Even gold found a lifeline here. It didn't actually undo its breakdown, but it found a little bit of support, as if to sort of reinforce the point.
Gold's action today was interesting. It does put it on the 4-hour chart, a bullish engulfing bar at the recent swing low. The low is measured from the recent high, so to speak. So you could call that a key reversal. Now, the lower the time frame, the less reliable the technical signal. But it's
and the other side of the range is still holding. So that's
when we see here,
right there,
we have our extension that goes to 2631, the measured move off the high, plus the swing high that we had on the day of the Fed meeting. And that little band the past few sessions has been holding up as support, for better or for worse. It also coincides when you go back to the daily time frame. We've been holding right around the 1-month moving average. So we're kind of pinned at an important area. I don't know if we could look at today's price action in gold and suggest that this retracement from the high is complete. But if there were reasons for this to be the area for that correction to stop and a turn to occur, you have enough technical meat on the bone there where you could say, all right, maybe I don't want to be bearish here right now. Maybe I want to wait another day and see what happens. Because on the bull side, we did run up into the 1-week moving average and we faded away from there over the course of the session. So this is kind of a difficult spot for gold, right? It's a no man's land, and we have one trading day left in the week. So if you hold them, if you got them, you probably are just holding them, waiting for a bigger directional cue. A close on the other side of the 1 week moving average here, if I was a bear, I would take that as a sign that maybe, we are going, as you pointed out there, Ilya, getting back through the underside of the recent range. You get through like 26.55, 26.70, punch through there.
Yeah.
You have a case then that this is the decline is now completely finished.
The correction's over, yeah.
The correction's over, and gold is then beginning what would perhaps be then a jaunt towards new highs. And you can see here, you get through 26.75 or so, the downtrend off of the late September and early October swing highs would be complete. I'm still long.
Flip right over. I'd flip right over. I'm tactically short only because the price action's there, but my heart is on the long side, as it were. So you tell me this correction's over. Let's go.
Let's go. Silver, you mentioned in recent days, Ilya, silver was trading this area right around 30.5 as a potential key turning point, having resistance in August and then support here in September and support again now at the start of October. It's a 74.5 IVR in silver. It doesn't mean the broader trading range is broken, but the metals all in unison today in the face of hotter inflation data perk up. And I think that tells a really important story. In the context of higher yields, gold and silver are signaling very much that the market has this outside concern. Dylan, the issue that you're speaking to, we should bring up the misery index, which I don't think we've talked about here on the show many times previously, if at all in detail. But the misery index is just combining the unemployment rate and headline inflation. It was coined in the 1960s when Lyndon B. Johnson asked one of his economists, Arthur Okun, Okun's law, as unemployment rate goes down or general employment rate rises, there's a positive correlation with GDP. The same economist comes up with this misery index for Lyndon B. Johnson. The misery index, the unemployment rate of 4.2%, headline inflation at 2.44%. You're looking at a misery index that right now is at its lowest level since before the pandemic hit. March 2020 is the last time that you saw the misery index this low. The concern would be is that this is the low point, though, Dylan, that a combined rise in the unemployment rate with a gentle lift here in inflation could ultimately spell problems for markets moving forward. So I would keep an eye on that.
I think that's the number one issue. I think, and I think that there's, especially because that September jobs number was so big, it just feels like a sort of number that could easily be revised. I mean, they all get revised, but this just feels like the kind of number that could get revised lower in a way that is meaningful.
If it were to get revised lower in a way that's meaningful, then some of the action that we may have seen in the bond market recently could be unwound, because we're now looking at a 22% chance that the Fed doesn't cut rates in November. That is not the read-through that I'm getting when I look at all of the commentary put by Federal Reserve officials, put forward by Federal Reserve officials in recent days. Lori Logan at the Dallas Fed, she said this yesterday. Following last month's half percentage point cut in the Fed funds rate, a more gradual path back to a normal Fed policy stance will likely be appropriate from here. What's a more gradual path? 25. Okay. Musalem, St. Louis Fed president, quote, I believe the further gradual reductions in the policy rate will likely be more appropriate over time. October 7th. Today, John Williams, looking ahead, based on my current forecast for the economy, I expect that it'll be appropriate to continue the process of moving the stance of monetary policy to a more neutral setting over time. They say more neutral setting because the way that they measure neutral, we're still in restrictive. If it's through the Taylor rule, if it's done something with like the neutral rate of growth. And so a bond market now that's saying 22% could be signaling something to the Fed, but oh yeah, how many times in history have we seen the Fed start a rate cut cycle only to back off? It's not what they do. It would be tantamount to admitting that they made a mistake.
The scariest thing of all.
And they did that in 2022, right? The market clearly said the Fed has no idea what the hell's going on. We got to de-risk. Right? Yeah. Rates got to be way higher. Equity prices are way overvalued. Until the Fed gets us under control, we got to step back.
Yeah.
If the Fed doesn't cut in November, we are in that market mindset again. And forget S&P 6K. That becomes a nightmare. at least from my positioning right now.
No,
So we'll have to fix it.
I'm with you. I'm with you. I think the market's nightmare scenario is that this is the Volcker double dip again. That essentially, again, after a rapid fight with inflation, unlike anything we've seen since Volcker in the 80s, when inflation was vanquished for a 40-year stretch, almost 50, the initial tendency was raise rates a bunch. Then it looked like inflation died. Then Volcker cut. It was too early. And they had to go harder and faster to really now not only convince the economy and the read through from higher rates to get absorbed, but to convince markets to believe that they know what they're doing. They had to go really big. And of course, that engineered a recession. So we have a situation here where if the Fed looks like it's messing up, markets aren't going to like it. Even if the Fed tells them 1,000 times over, we're not on a preset course, we are going to do this gradually, we're data dependent, they need to be pressing that story louder and louder and louder. We saw it in FOMC minutes. We saw it basically from everyone that followed Powell's speech last Monday from Fed officialdom. And you've just distilled it here. Everybody's basically saying, hey, okay, hold on. Everybody thinks we're on autopilot. We're not. Take it easy. And if the markets now think, wait, the Fed isn't giving us everything that we wanted after all, they're not going to like it either.
You can see the gyration of the SR3Z5 contract today. We settled in at 96.56, but that wasn't before we hit a low of 96.43. So in effect, the market swung half a rate cut off the board at its low point today and then added it back in. There's clearly been a lot of damage here, and I don't think it's difficult to suggest that a lot of it has to do with the bond market weakness. The rate cut odds for 2025 effectively start coming off the board the day of the Fed meeting, right? They peak actually a few days earlier, but once the Fed meeting comes in, we don't revisit those levels since then. So the bonds have a problem with the rate cut expectations. I still can't shake the idea that so much of this, that's not supposed to be like that. Let's go here. So much of this has to do with oil today. Dylan, this is a painful move if you are long puts or short calls.
No
How
kidding.
are you? And I'm in there.
I'm going to let it ride. I'm a believer in my thesis, but I wasn't happy.
Is this the kind of environment with a 99.1 IVR? We just say, who cares what the news is? We have to look this down and just sell the vol? Or is this the time that the boy cries wolf and the wolf is actually there? Oil really is staying volatile in a manner that's becoming less consistent with each passing day, like it was in April or like it was last October. Is that a change in behavior that we should be paying attention to?
I mean, I don't. I mean, obviously, no one knows those answers. For sure, if anything, I'm going to be inclined to sell a call spread and keep my puts on. I'm going to maintain my commitment, even though my put is getting kicked around a little bit. But I'm more inclined to sell a call spread than to do anything else here, with the obvious risk being the cry wolf phenomenon. But I mean, the other thing is, it's not just the geopolitics; it's also the cry. You may have a stronger economy and inflation, all of which would be not a lower oil price in the shorter intermediate term. So I think that's why the vol is what it is. I mean, I'm sure that's why the vol is what it is.
One thing working against the idea that demand is going to be a dominant uplift here is that supply is so ridiculously abundant that that's going to blunt the impact. I mean, OPEC at this point is all but jettisoning any pretense to even want to try to fight this market. Demand expectations got revised down by EIA earlier today. They updated their numbers. Supply is, to say that it's plentiful is to say very little. There is so much supply, and more is coming. So the idea that, I mean, just think that I read this tidbit in The Economist earlier today, actually. OPEC was close to 60% of global output in 2019. It's more like 40% now. That's not a long time. That's only 5 years. And in the middle there was a huge pandemic. So that just tells you the extent to which the U.S. is overwhelmingly the dominant producer of oil at this point, more than Saudi and Russia combined. So you could do a lot on economic growth and not spook oil prices higher in a meaningful way. I mean, maybe you get back to 80, the top of the recent range, for a quick jaunt, but it seems difficult to imagine that you get a massive rally.
Oil here faces a unique problem that not only do we have the world awash in supply, largely thanks to the American innovation boom in recent years, we see that OPEC spare capacity is still running at exceptionally high levels.
Like 5 million barrels a day, last I saw.
Yeah, currently
of which Saudi is like 3, and they've abandoned their price target.
According to the EIA, so the government agency here, if we were to look at our chart of OPEC spare capacity for where we are in 2024, we're right around 4.5 million barrels. And the spare capacity that OPEC has is expected to persist, which is to say that if oil prices rally, there's a very strong incentive for these countries, which, you know, prior to 2008, they kept a spare capacity roughly under 2.5 million barrels per day. From 2012 up until 2020, that was very much the case again, largely under 3 million barrels spare capacity. So if they were to take down their spare capacity, they were to increase production. We can't really do that here in the US. We're basically tapped out. We're running on full tilt for how much oil we can produce. We're like 98.5% last time I checked, 97%, somewhere in that neighborhood. But for OPEC, they could really boost production significantly moving forward. And that becomes a limiting factor on oil prices sustaining a huge move to the upside, right? So many of these countries rely on oil to fund their federal budgets, their fiscal deficits, what have you, that if they see the opportunity to make more money, they're going to take it, and it's going to keep oil prices naturally capped. I think this is the most important chart for oil long term. If you get big rallies, it's difficult to sustain because there's a natural pricing mechanism that incentivizes greater flow into the market almost immediately, and it's not difficult for some of the biggest producers in the world to turn on that tap. But that's a big macro issue. That's not a short term. There's a ton of vol because Israel and the US are having very public negotiations about what targets inside of Iran are acceptable to hit. Bibi wants to hit Iranian oil and nuclear facilities. Biden really doesn't want that because Iran has said that is a red line. We have to wait to see how this theater turns out, if it is Kabuki theater or, Dylan, if it is the time that the wolf is actually there and the boy is not lying.
One thing about the U.S. being tapped out, just something to keep in mind here, the number of operational fracking rigs in the U.S. and the number of regular rotary rigs. This data from Baker Hughes on the rotary rigs from Primary Vision, which is a consultancy on the fracking rig count. It's been falling since March. So we are actually producing more oil. This is, Chris, to your point about technological innovation. We are mothballing rigs and output is surging. So we have spare capacity. It would take longer to turn the rotary rigs back on. That can take months. But the fracking rigs, you can basically turn on, I mean, not quite overnight, but close. So we could, I mean, to put this in context, we are at the lowest number of operational fracking rigs since December of 2021, and the lowest number of rotary rigs since about January 2022. So we're looking at basically approaching 5-year lows on how many actual working extraction points there are of both kinds, and output is at a record. We're very efficient at this. It would take us some time to turn these things back on to their full steam, but if we did, bottomless pit.
Yeah, the spare capacity definition is, can the production be brought back online within 30 days? So when you say it's going to take months,
it's going to take
that's
months.
true. It's going to take months. So that's the difference between the U.S. system and like Saudi Arabia, for example. Saudi has the ability to just flick on the switch within 30 days. We need a little bit more
Put
time
a
to get off
straw
the
into
ground.
the sand and stuff comes out.
Yeah, right. In terms of the big movers here today, as we wrap this up in the last few minutes, the sector performers, it was a mixed bag. We tracked 25 here. I have 9 of the 25 sector ETFs in the green. GDX, GDXJ are the two leaders, up by 3.7 and 2.78%. Not respectively. I listed those backwards, so forgive me. XOP, OIH, XLE, IYE round out some of the other top performers, but it's all commodities that are doing well. Materials. The only non-commodity sector that's positive today is biotech, which worked out a whopping 0.01% return higher. On the downside, your biggest loser is home builders, as we see another push to the upside in those rates. Mortgage rates have been swinging back higher, but very curiously, if only to speak to the demand situation that we have in this country and the lack of supply, home builders have really not been hit all that hard, despite this very sharp move higher in rates. Long end rates are up, 50 basis points? Since the Fed cut by 50 basis points, home builders they're not off that significantly. So I think this should be one of those, hey, headwinds are strong, you're not going down as much. Maybe that's a sign of resiliency here. I would keep an eye on that. I'd also keep an eye on XLY heading into tomorrow, because today Tesla is in the crosshairs. Tesla Robotaxi Day, right? Dylan, did you hear anything about Tesla Robotaxi Day that makes you incentivized to get long Tesla shares?
No.
Okay,
No.
Tesla-
I mean, at this point, there's such a history of mañana, you know. This is
it is tonight, right? Like it's at 10 p.m. There's been nothing big in the lead up, but like it's a joke. I mean, I don't mean to interrupt you, but I poked fun at this on last call as well, right? Like, oh, FSD is just around the corner. Should we be laying out tomorrow morning, selling as much Tesla as possible, or buying as much Tesla as possible because of Elon Musk in this event tonight?
Yeah, I just don't. I think that it's a prove it. I mean, at this point, he's promised it so many times.
Tesla share price is down by 0.65% today. They, like many other things, off their lows. I got cold feet here, admittedly. I laid out a Tesla short call maybe last week, and once it moved quickly, I could profit on it. I shouldn't have, but volatility is higher now. It's an 82 IVR. There's still ample opportunity against the 270s. But guys, we're going to have to cover that, and we'll talk more about this Tesla Robotaxi event next week, because overtime is out of time, not for just this Thursday, but for the rest of this week. We're back here on Tasty Live every Monday through Thursday, 4 p.m. Eastern, 3 Central, right after last call. Of course, stick around. After a brief break, you're going to have myself, you're going to have Dylan Radigan back, the prediction trade. We're going to talk betting markets, the latest churns and twists in the presidential race, see if there's a way that we can make a buck on it. 30 minutes after that, you're going to have Ilya Spivak with Macro Money, so a whole lot more Tasty Live coming at you. For Ilya Spivak in San Francisco and Dylan Radigan in Milan, I've been Chris Vecchio. See you on the other side for the prediction trade. Welcome to the prediction trade. If you can bet on it, you can bet we're talking about it. My name's Chris Vecchio, standing in for my co-host Jeff Joseph. Today is the one and only Dylan Radigan.
Good afternoon, good evening, and good night, sir. Good afternoon, good evening, and good night. What do we got?
We have a whole lot to
Kamala's going to
discuss
win the
here.
popular vote and lose the presidential election. Is that basically the headline? If you were to just
That
take the markets.
To be the headline if you're taking markets at face value on this Thursday, October 10th. Welcome everyone for this latest edition. If you're in the chat, tell us what you think about the latest contours of the presidential election race. There's been a lot going on in betting markets recently, Dylan. We've seen that while Kamala's odds of winning the popular vote continue to increase, we've also seen that her odds of winning the Electoral College have begun to decrease. It's not lost on me, at least, that when you look to betting markets, there has been a sharp rise in Trump odds in recent days, perhaps in tandem with what's happening with his share prices. DJT was up 16% today. We see Donald Trump in the betting markets up 2.8%, now 55.9% chance to win the presidential election to Kamala's 43.6% chance. Some of the more notable movers in recent days have been the shifts in polls in Pennsylvania, in Nevada, North Carolina, further towards Trump. And so the market here collectively is saying that Trump will be the 47th president of the United States. Now, Dylan, in recent weeks, we've had various guests on from the left and the right to talk about the state of the race. It's clear that both people, regardless of their own ideologies or political affiliations, they've centered the race on really two states, Pennsylvania and North Carolina. If North Carolina goes to Harris, it's going to be a very difficult battle for Trump to win the rest of the states needed to become the president. And if Harris loses Pennsylvania to Trump, it's going to be a very difficult endeavor for her to cobble together the votes, the Electoral College votes needed to win the presidency. So as we look to a 55, we'll call it 56 to 44 betting market, if we're going to round up here, Dylan, are we able to make a guess here on this Thursday that it's the prudent thing to either buy Harris cheap here to look for a rebound in odds, or is this the start of Trump's ascent towards a full dollar?
I mean, for me, I would be more inclined to buy Kamala cheap. Not because I think Kamala is going to do anything persuasive or charismatic or interesting. I think she's a catastrophically horrendous candidate, vacuous and horrifying. But I think Trump is capable. Trump is also, the odds that Trump does something really, really stupid are still very high just because of the amount of time. Which is not to say that he won't ultimately win, but I think there's enough time on the board that that this thing can switch. The momentum can switch again.
The momentum has been pretty stale recently when it comes to actual polling, however. According to Nate Silver's blog, the Silver Bulletin, right now Democrats have a 3-point margin on the national level. They have a 1-point margin in Pennsylvania, a 1.1-point margin in Michigan, and a 1.2 margin in Wisconsin. But that's not the full state of the race, Dylan, because if we were to pull this up here, and it's always better to show than tell, so let's just pull it here into the screen, we could see here that over the past several days, Republicans are gaining more ground. Trump is up, relatively speaking, over the past week in Pennsylvania, in Michigan, in Wisconsin, in North Carolina, really across the board. You go through the Sun Belt, the only state that he's not improving in is Georgia, and yet that's still ahead for Trump. So this has been a pretty good week for Trump, all things considered. Would you point to any event in particular that's been driving the shift towards Trump that we should be watching for?
Yeah, I think it's just been Kamala doing a media blitz, and these are both candidates that the more they're seen, the less they're liked. So both candidates are to the advantage when they're perceived in the abstract. And I think the huge benefit to Trump the last 5 to 10 days has been the Harris media blitz, where everybody's forced to actually witness her as opposed to imagine what she might be if they don't have to listen to her.
So I would take it then that you think that the media blitz in front of friendly interviewers like 60 Minutes or The View, I don't think The View would be particularly challenging.
Call Your Daddy or Stephen Colbert.
Stephen Colbert especially, right? You don't think that this is an effective way?
But I think the cumulative effect of all those has been to Trump's advantage.
It does seem that listen, the numbers are the numbers, right? We're seeing the polling come out in real time, and she has been in front of the camera and her odds are down. But this is what is, I'm trying to square these two things here. Are the betting markets effectively wagging the dog that is DJT, or is DJT wagging the betting market? I say that because Donald Trump Media and Technology Group, DJT, is up 46.18% this week. That is an astronomical turnaround in a short period of time. Of course, the shares have been through a lot of volatility this year. They surged from about $15 all the way up to near $70, $80 a share back in April. They since crashed back down here in September, October, back towards 15. But here we are bouncing again. It feels like these are two markets that are moving in tandem right now.
But I think the DJT stock price is reacting. I think you have three things. One, the Harris Media Blitz, which is hugely to Trump's advantage. The Butler rally with Elon Musk, which is also beneficial to Trump. And all these hurricanes, honestly, they've done a good job distorting. The right has done a good job creating the perception that the hurricanes are mismanaged and that it's Harris's fault, which I'm sure that's not true. But I think that the combination of the natural disasters, a successful Musk-Trump rally in Pennsylvania, and Harris's remarkable ability to turn people off when she speaks in public all triggered the betting markets, which then I think triggered DJT. I mean, what would your theory be? How would DJT rally and then boost the betting markets? How would that work?
If you want to work through the mindset that DJT is a vehicle for people to peddle influence with Trump, right? Because if you can't give him a certain amount of money, you can always go out there and buy the shares to his stock that will enrich him. And candidates can spend an unlimited amount of their own money on races. So if Donald Trump has higher equity value, if DJT has higher equity value, he could borrow against it in theory to fund his campaign. So if you view DJT as a vehicle, again, cynical, I'm not saying I believe this, but if you view the world in those ways, you could say that this is people are pumping DJT as a way to help Trump's campaign. And so people are viewing this, the bump in DJT as a, you know what, the campaign's going to have more resources perhaps. He's in it to win it. This must mean that we should be placing higher odds on Trump's election victory. It's a cynical view. It's not one that I share, but I could understand that if you view the world that way, you'd have that read through. Quite frankly, I think you can point to the Harris Media Blitz as the key variable over the last 5 or 6 days. Well, it is a confounding strategy. I understand that she needs to get out there more. Although when you hear some of these interviews, they're asking her about criticisms that Trump has levied against her. They're not really asking her about policy. But the one thing that I did find confusing, and the perception is there that you're mentioning with these storms, when we have Helene make its way through Western North Carolina, which if you haven't seen the videos, folks, go check them out. It's a real catastrophe. It's a catastrophe which has happened in Florida again overnight with Milton making its way through there. When we're having conversations, FEMA's running out of money. We don't have more money to spend. We need Congress to come back in a session to allocate more funding. And you're also having her go out and make announcements about sending more aid to southern Lebanon. It gives this perception like, hold on, you're telling us that there's not enough money for FEMA, and yet there's money to go abroad. How come we can't have that money sent here? Now, they're two completely different pools of funds. Who controls and allocates the funding for both pools? Entirely separate. You can't just go raid foreign aid funding to go help with FEMA and vice versa. That's not really how it works. There are ways to divert funding away from FEMA to help with the border and vice versa. But in reality, that's not the whole story. It's not true. But it's bad optics.
But again, I'm just saying in terms of the perception, it's an abomination.
That's exactly.
I mean, there was a meme circulating where Florida had changed its name to Ukraine in order to expedite resource availability.
And that is the part and parcel of the problem. Perception matters more than reality. And so it's been a rough week on the perception front, even if the reality has been pretty good because we've received some decent jobs data. The labor market report last Friday was quite strong, right? Maybe there's a read-through here as well with what's happening with inflation expectations and oil. If oil prices are going up, inflation's going to come back. And if inflation's coming back, well, then it's more difficult for the American people to swallow a second term, effectively, of the Biden-Harris administration, which oversaw the largest increase in inflation in 40 plus years. Again, we can say it's an inflation that everyone saw, that was seen in the West. It's not just an American problem. It doesn't have to do with our spending per se, because Europe and the UK and Australia and every other major economy saw the same inflation too. But again, perception matters more than reality. Telling voters, hey, don't worry, other people had it crappy too. Your grocery bill isn't really a concern to us. It's not a winning message here. Dylan, moving on though, within the political sphere, as we go to the second half of this program, I want to talk about the balance of power here. Right now, the highest odds are for Republicans to sweep the House at 36%. Do you feel like those are odds that we should be fading, given how most non-betting markets, you look at the poll aggregators have the Democrats taking the House?
I do. Yeah, this one I think I think the opportunity is on the adverse side, the opposing side of the 36% on that one. Particularly, I think as Trump elevates, and I actually think that counterintuitively, the odds of a Democratic House also increase.
Almost as if people say, I'm willing to vote for Trump, but I want to keep him in check.
Exactly.
Republican sweep is 36%.
I would rather have Trump than Harris, but I don't want Trump unencumbered.
The second most likely scenario on the board here is Democratic President, Republican Senate, Democratic House, followed by Democratic sweep. For my money, I think the best value on the board here is probably Republican President, Republican Senate, Democratic House. The polling that we're seeing coming out of places like West Virginia and Montana are pointing pretty strongly in the direction of Joe Manchin and John Tester being replaced by Republicans. If you look to Ohio, for example, right now, Bernie Moreno is making great strides in very quick order versus Sherrod Brown, the Democratic incumbent. And I say great strides not because I'm rooting for him. I say great because he has closed the gap in a very, very, very short period of time. Whereas those margins were 4, 5, 6% a few weeks ago, they're now almost at even. And if you're in the margin of error, anything can happen. So for me, the surest bet right now, if I could make, is that our Senate is fixed. I feel most confident that Republicans are going to take back the Senate moving forward, given everything that we've seen nationwide. There's been some fanciful talk about Democrats potentially beating Rick Scott in Florida or Colin Allred beating Ted Cruz in Texas. Those are fantasies, I think, for most people on the left. There's a reason why Austin is known as a blueberry in Texas, because it's a blue dot among a sea of red. So if they're not going to take back Texas and they're not going to take back Florida, which again, possible, but unlikely, you're probably staring down a situation where Republicans get the Senate, everything else considered. So Republican Senate, anything that has that as part of their odds should be eyed. House.
What about shorting that Democrat sweep? That seems like 19% seems rich for a Democrat sweep, considering what you just said about a Republican Senate and considering Trump's position in the field at the moment.
For me, the two most unlikely outcomes are sweeps by either party. And collectively, they're polling at 54%.
Short that 19 points? I'm sorry?
I think I would just, if we're thinking about the market here, where it's 36%, 19% for Democrat or Republican sweep, collectively that's 54%. We could go through and buy everything else here. If you're interested in fading the sweep scenario, the non-sweep scenario is only, collectively 46% then.
Mm-hmm.
And the polling right now, if we call it, the polling favors Harris right now at the Electoral College level still. The vibes are shifting. The perception is clearly shifting in the betting markets. But the Senate looks like it's moving further to the right. And if Trump is able to win, there could be some down ballot knock-on effect where you got a stronger Republican turnout. Dem House, if they're going to take one thing, that seems higher likelihood than the Senate.
Mm-hmm.
But sweep is not in my cards here, Dylan. So a 54% chance of a sweep by either party. I think our conclusion here is that is the market to fade. We haven't yet looked at the actual Electoral College outcome itself, which we talk about predicted here, and we should go to predictit.org for these. I should have had this up earlier, but when we go to the presidency and we go to the distribution, electoral college margin, this also seems like it's a little out of whack. Most of the polling right now, if you were just to look at the top line polling, you're to go to the Silver Bulletin, you go to 538, you go to Decision Desk, you would see that the likely outcome is that Democrats or Republicans are going to take the presidency somewhere between like right around 280 electoral college votes. If you're at 280 electoral college votes, odds are that the margin is going to be right around 20, 25. We think about electoral college here, betting something in that 20 to 25 range. GOP by say 15 to 64, you could buy that all for 21 cents. Dems from 15 to 64, you could buy that all for 22 cents. Everywhere in between, you could bracket out. This is going to be a tight race. Dems by 64 or GOP by 64. 12, go buy yes on these. 13, 10, 23, 28, 32, 38, 46, 55, 70, 70% chance. You could lay out 70 cents that it's going to be a close election. I think that's a pretty good bet too. I don't think it's going to be as widespread or far out as people assume, Dylan. It feels like it's going to be a coin flip, just like in 2016 and 2020.
I totally agree with that. I mean, I'm just trying to look at this screen you've got up. Why is it, if you go, what is it, GOP, the one that's not on the screen, the 23-cent contract? Oh, that's a 12-cent. GOP by 65 to 104. That's the
GOP by
margin of
105.
victory?
Yes, in the Electoral College.
I mean,
That
that
is
seems to be
rich.
wrong.
That does seem to be
But also,
wrong.
but look at the width of that market. It's not a real market. That's why. It's 24 by 77. Those aren't real markets.
These are not the tightest markets right now. No, they are
Are you
not.
kidding me? It's 9 by 92, 8 by 93. Come on.
Buying no on Dems here as well. Would you lay out 95 cents to say that the Dems won't win the Electoral College by 105 to 154? That is an answer that we should explore, right? This is not, the return on investment isn't great. You're laying out 95 cents to make 5. It's not the asymmetric payout, convexivity wise, that you would see if you're doing like the belly, for example. You know, we're looking to say that you're going to fade the presidency or a sweep scenario. But it's a month out. And if you're investing 95 cents to make 5 cents back, and your holding period on this is effectively 27 days, that's not a terrible rate of return. And if you're turning over 5% in a trade once a month, and you're doing that 12 times a year, you're going to stack up returns. Obviously, it doesn't work out like that because we're not going to win every single trade. But probabilistically, if you can skim out, they're selling $1 for 95 cents. These scenarios are outrageously mispriced. Are we going to get a GOP landslide in the Reagan sense? Most likely not. Are we going to get that in the Democratic sense? Most likely not. So not high convexity,
So you're saying these
but
little
safer
2
bets.
these 2 to 5 cent contracts, you're saying?
Scoopy scoop. Not
Mhm.
worth.
But it's easy money, relatively.
Relatively speaking, when we look at the polling, you'd have to see something that would be like a 4 sigma deviation away from where the polling is right now to get Democrats or Republicans winning by more than 150 electoral college votes on either end. We can all have our fanciful expectations that there are shy Republican voters, or there are Republican voters who, shy Republican voters for Trump, right? Because of social cueing, they don't want to deal with people knowing they're voting for Trump. There are people who are Republicans who don't want to know, or don't want people to know that they're going to be voting for Harris, right? There are Democrats who are fed up with Biden and Harris on the left who don't like their position on Gaza, who could be voting for Stein or for Trump. So there are people who are betting on these markets thinking that there's a silent majority out there that's not being captured in the polling. In many cases, there's a legitimate reason to think that. We had Robert Cahaly on here a few weeks ago who explained that social factor and why it was such a significant issue for 2016. But to the degree that there's that many voters out there that we're going to see a Reagan-like landslide, I think that's a difficult sell because even in 2016, that was not a Reagan-like landslide, Dylan.
Well, not only that, I mean, this is where I'm going to go full Ilya Spivak on you. Donald Trump this will be the third consecutive presidential election where Donald Trump is one of the two major party candidates. The folks that will vote for Donald Trump will vote for Donald Trump, and they're much more at the surface now than they were for sure in 2016. And I don't know about 2020. So I think that the silent majority or the sort of the sleeper Trump voter is less of a factor the third time around than it was in 2016. So I actually still think that this thing, regardless of the betting markets, is actually still a coin toss. Despite Harris, that's why I think Harris is maybe a worthy buy at 40, whatever that was, 44 cents or something. I think that that's a more of an opportunity to buy Harris than it is an opportunity to sort of watch Trump break away.
Let's turn our attention away from politics here at the end of this segment and instead go over to something adjacent to our discussion on the previous program, overtime. For those that don't typically tune into overtime, it's 4 p.m. Eastern, 3 Central on Tasty Live every Monday through Thursday. Myself, Dylan, and our co-host, Ilya Spivak. We were discussing the move in oil today. Oil was up just over 3.5% as it looks like that Israel and Iran may be gearing up for the actual attack now. There's been a lot of back and forth. There's been a lot of boy who cried wolf, saber rattling, fear mongering. But apparently Israel is starting to paint some targets and is looking for U.S. approval and support to hit said targets. While oil prices are moving up here in the short term, folks like Dylan and myself who look at geopolitics say these moves typically don't last a very long time. And so we want to fade the moves that we're seeing in oil. Oil's running up, volatility is expanding. Well, we would like to see that not last for a long time. There are other ways to express that point of view, though. You don't need to be trading crude oil futures or buying out of the money puts that are trading cheaply or selling call spreads in order to maximize your opportunity around that environment. There are two markets now listed here on Polymarket that may draw people's attention who are paying attention to the Israel-Iran saga. One, due to settle almost immediately, Israel military response against Iran by Friday. That would settle tomorrow. Will there be an Israel strike on an Iranian nuclear facility in 2024? That contract is trading up a 33% chance. It's down 8%, it says here. From recent highs, we had a high on the 8th at 46%. Dylan, for people who are trading oil or looking to fade off the oil vol, there's a really interesting, perhaps, I don't know if we want to call it a hedge scenario.
You're saying buy this and sell oil? I was thinking the opposite. I was thinking if I'm short oil, you got to be short this thing. I mean, I can't even let you go down that road. That is no way to live. You can't be long on a nuclear strike, or not a nuclear strike, God forbid, a strike on a nuclear facility and short oil. You got to pick a side, man. You can't. I'm entertained. I am entertained by the thought, but I'm sorry. No. You can't. How can you sleep at night? You're long.
It's a bad match.
Strike.
Oh. Dylan, the Mets won yesterday. I'm going to sleep like a baby tonight. Trust me.
I mean, because how can you be fading oil and be long this contract? That is a charming duo. But
look,
it is a hedge. Sorry?
It is a 3-to-1 payout, and it is a hedge. It's fascinating, though, that we're now starting to see more and more of these event-based contracts being listed. Of course, here in the United States now, we've seen with Kalshi, they have their own contracts that are listed. They have a fantastic platform. They are a little bit tighter, and this is perhaps worth exiting on. As we've seen liquidity come into Kalshi, it's kind of straddling between Predicted's odds and Polymarket's odds. We don't have enough information. The markets have been live for barely a few weeks, if that long at all. But what we do see here is that this is perhaps the median point to look at. if you take Polymarket, if you take Kalshi, if you take Predicted, Polymarket obviously has a ton of money in it, about $1 billion laid out on presidential election bets for this year alone. Kalshi is not quite there, of course, because these are still in their infancy. But as we go through this price discovery, we're going to see which betting markets have certain biases. Kalshi appears to have a limited bias because, unlike Predicted, you're not really maxed out on the trades that you have here. Predicted, you can only put out a certain amount, and that limits you, not a ton of liquidity. You mentioned the spreads there, Dylan, were fairly wide. Here, though, I would encourage people who have been trading Predicted, who have been trading on Polymarket, check out the newest entrant, and perhaps the one that will stick around the longest, Kalshi. We'll be trying to have their founder on the show for our election night special, so hopefully he can come out. But with that, Dylan, we're going to put a wrap on this week's episode of The Prediction Trade. It's been a fantastic conversation again. Jeff will be back next week. We will be having on more guests, so stay tuned. If you haven't had a chance to view the other episodes with guests Rachel Bitterkoffer and Robert Cahaley, please go do so. Check them out on the Tasty Live Trending channel. But for my friend Dylan Radigan, thank you for sticking around today, sir. I will see you tomorrow. I will see everyone else later on as well. While we're done here on The Prediction Trade, there's more Tasty Live programming coming up next. Stick around for Ilya Spivak and Macro Money. If you can bet on it, you can bet we're going to talk about it. Master your math, trust the odds, and stay tuned for next time.
Well, the stock market didn't know what to make of that, but the bond market did. We get a bevy of U.S. economic data and some very interesting responses from financial markets. And we're going to unpick them here. This is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And as we do this, we're going to try to figure out what all this means. And from there, try to divine what might be next for these markets. We have an interesting lead from various corners of the financial asset universe on what this means, and a bit of economic data waiting in the wings here to close out the week that may offer some much needed clarity. So let's take a look here at what we ended up with. Of course, everybody was very closely watching for what would happen with today's U.S. CPI report. It came out hotter than expected, as we anticipated would be the case. Of course, looking at the U.S. economic data that's increasingly outperformed relative to forecasts over recent weeks. This is a chart where we've been looking for a while. This is the Citigroup Economic Surprise Index, and we can see from late August going into September, we had an upturn in U.S. economic data performance relative to expectations. We, of course, saw that in spades with last week's white-hot ISM service sector data and employment statistics. So the expectation that we had going into the CPI number, if you've been watching Macro Money all week, has been we're probably leaning toward a hotter number, and that's exactly what ended up happening. And of course, as we've speculated here, that might dilute Fed rate cut expectations and hurt stocks. And so it did, if only briefly. Here's the release of that data here. So initially, as the numbers come out, the markets don't like them. Then we rally back into the intraday range high, then come right back down into the range low, then settle basically in the middle. So the response from the S&P 500 here, a kind of bellwether for market sentiment, is a bit of a shrug. It's unclear what investors ultimately make of this, and that's because in parallel with this CPI data, we also got jobless claims numbers that seem to tell the opposite story. So here's what the S&P ends up looking like by the end of the day. So yesterday, in anticipation of this data, there seemed to be a rally through the the previous high, a new record closing high for the S&P. But today, an inside day. We don't manage to go higher. We don't manage to go lower. We are stuck as the markets try to make sense of what is actually on the menu here. So here's the CPI report. It comes in a bit hotter than expected, 3.3% on core CPI, probably the biggest and most eye-catching part of this. The expectation was we'd hold at 3.2%. The decline in the headline, a little bit shallower than expected. Markets were looking for 2.5 to come down to 2.3. We ended up with 2.4. But the action is really in that core number because, of course, that's what captures where most inflation is at the moment, and that's the service sector. Here, that rise to 3.3% is a very significant change of pace. That is actually the first rise in core inflation year on year since March of 2023. So the markets understandably look at this and go, okay, there's a string of hotter than expected U.S. economic data that's starting to feed into inflation. The Fed is not going to be in a position to do as many cuts as perhaps they thought, or certainly as the markets have speculated. And what we're going to end up with is more expensive money and some kind of a headwind. But then what you end up with, released at the very same time, is a very conflicting set of indicators from the weekly jobless claims report. And here we have a blistering jump in initial claims. So we can see here, not only do we get this very steep increase in weekly claims. In fact, this was the biggest 1 week rise in 15 months. But we take out the 4 week average, which is the monthly average. We take out the 12-week average, which is a guesstimate for what a quarterly number might look like. And then, of course, both of those averages turn higher. So the trend seems to turn in more than just a one-off kind of way. We get something similar in the numbers for continuing claims for unemployment benefits. It's not as dramatic here. Here we have the largest rise since we look basically at the second half of July or so. These are weekly numbers, of course, so our reference point is not a month. It's basically here where we have toward the tail end of July numbers that are comparable. And as with initial claims here, we're through the 4 week average, we're through the 12-week average. So there seems to be a meaningful change of pace here that's occurring. And of course, more claims for unemployment benefits really clash with the vigor that we saw in the jobs report from BLS last Friday. And of course, if the situation is weaker in labor markets, or at least if the situation is uneven in labor markets, this is exactly the kind of thing that might inspire the Fed to ease, as we've heard from Fed officials basically since the beginning of July, when Fed Chair Powell gave that fateful testimony to Congress that set us on a path to start the rate cut cycle finally in September. The Fed now sees risks to inflation as being roughly balanced with risks to the labor market. That essentially now it isn't just that the Fed is worried that inflation will be too high and won't go back to their 2% target over the medium term. Now they're concerned in equal measure, give or take, that unemployment might end up being too high. And of course, the very rapid pace of service sector job creation that we saw in the ISM numbers, the very impressive set of official labor market statistics from BLS for September, where not only did we get 105,000 more jobs created than than market watchers expected, rather, we also had the August numbers that were initially reported revised higher, and not by a small margin. July's also revised higher. So the vigor in the labor market looked like it was very significant, and looked like the Fed may not need to cut as much. Whereas these numbers seem to argue in the opposite direction, and of course clash with hotter inflation numbers that seem to pull in the opposite direction. So it isn't surprising, as it were, that stock markets looked at this, kind of threw up their hands and said, well, we don't know what to make of all of this. But where there is conviction, seemingly, is the bond market. And if we take a look here, in particular at the long bond, we get a very clear sense of what's going on. This has been sinking for a while, of course, but the response to today's data is unmistakable. The long bond falls, and not only does it fall, but it takes out the bounds of higher highs and higher lows that have been carved out since all the way back in April. This, of course, is that big shift in dovish expectations. By the way, not to be disconnected from what's happening in economic data. Consider, we have had since mid-April deteriorating U.S. economic outcomes. Meanwhile, the Fed was resistant to cutting because inflation was stalling on its path lower. In May, the Fed came out all frustrated and said, we've seen a lack of progress. And in June, they went so far as to take official forecasts, which they had at 3 cuts for the year in December of last year and in March of this year, and slashed them down to 1 cut because they thought inflation wasn't going down as quickly as they wanted. So not surprisingly, when all of this was happening, if we look at how the markets responded, here's mid-April right here, they started building out rate cut expectations, mainly focused on next year. So we can see here the actual adjustment in the odds of what's going to happen for 2024, very modest from April until Powell basically gives the green light on cuts in the beginning of July. Up until then, the outlook for this year, fairly modest as far as how much stimulus the Fed is prepared to do. But because the data is getting worse at this point, all of the cuts are going into next year, saying, well, the economy is deteriorating, you all are going to have to do more. And you're going to have to do a degree of catch-up. So things get more dovish. Not surprisingly, of course, mid-April then is the place where bonds begin to rally because interest rates, especially downwind, longer end of the curve, start to come in. And we get this massive rise. Well, that move, the bounds of it, the outer bounds of it, as it were, now very clearly violated. We've attempted to break down, and we've taken out the previous levels that served as resistance here, retested as support. We can see we very tellingly paused right here for a day, and then we've pushed through. So the bond market is seeming to tell us that with the situation in the data presented as we saw it today, the focal point wasn't the jobless claims, it was hotter inflation numbers. And we can see that not only was the long bond lower, and so long end yields higher, but the yield curve steepened. And that's as the front end held basically unchanged. The markets didn't take a read through into current Fed policy odds, where we're still tilted toward 50 basis points in cuts before year end, 1 cut in November, 1 cut in December is the general baseline at this point, although the markets are back and forth on what the actual probabilities per meeting are. At this point, the likelihood of a cut in November at 87%, the likelihood that we'll get the 2 cuts that the Fed essentially anticipated when they updated policy in September. By the end of the year, 86%. So at this point, that much seems clear, and not surprisingly, the 2-year yield doesn't do much today. But the pathway going forward seems to be, once again, saying the Fed is pouring stimulus on top of an economy that's heating up, not slowing down overall. And so what we've seen here is that there's been a steady rise in break-even rates. This is the measure of inflation that's implied in the bond market, taken as the difference between nominal yields and the real yield, the TIPS yield. That, of course, gives you the magnitude of the inflation adjustment from one to the other. And as we can see here, those inflation expectations at the 5-year tenor, at the 10-year tenor, they've been going up, including today. Here's the yield curve right here. This is the 10 to 2-year yield curve, and we can see it steepened, not surprisingly, because the long end went up and the front end held steady. Even gold ticked up a little, all of which says we're probably going to get hotter inflation downwind, and that probably means higher rates in the future than in the immediate term, all of which seems to say fewer rate cuts. So the bond market is looking at this, and it's saying stocks might be confused, but I know where things are going. Things are going toward higher rates and fewer rate cuts. And this is where things get interesting, because if we look at what that's meant for stocks, we can see here's the Fed's September cut. Since then, the data has been getting better, and so there's been a move to a less dovish setting here. We can see we've gone from about 160 basis points in cuts through end of next year since the Fed meeting, now to about 130. So we've shaved about a cut's worth so far. And against this backdrop, what do we see? Stocks stall. So ostensibly, if the bond market is right here and stocks ultimately decide that that's the correct readout, then we could very well see, at the very least, a capping of upside momentum on stock markets. Now, will this become a sell-off? We shall see. Markets have continued to surprise with their resilience all year. But the story here might get some much-needed clarity, because we are going to get a little bit more economic data here, and that comes by way of the University of Michigan's Consumer Confidence Survey. Here we're looking for expectations to improve. We're looking for the assessment of current conditions to improve. That, of course, giving us the 3rd consecutive month of stronger consumer sentiment overall. The 1-year inflation outlook seen coming down from 2.7 to 2.6%. Now, if in fact we are looking at improving consumer confidence here, that is, of course, a very positive story for the economy. U.S. economic growth is overwhelmingly driven by household consumption, which accounts for close to 70% of GDP growth. The amount that's accounted for by government spending, by comparison, is a laughable 17%. So we're looking at a situation where if you were to have a brightening of the mood amongst consumers, the argument would very much be in favor of a stronger U.S. economy, and the jobless claims numbers would look like the odd ones out. Or at least they would look like a weekly data point, not to be over-extrapolated, may be linked to the impacts of hurricanes, may be linked to other sort of episodic developments, not really something that has followed through and not really something that fits within larger dynamics. It would look more compellingly like noise. And if we were, in fact, to get a pickup in U.S. consumer confidence, then the expectation would be that this otherwise positive story of improving job creation, of improving affordability, because of course the other thing that that jobs report told us last week is that wage growth unexpectedly jumped to a 4-month high of 4%. And if we consider how 4% stacks up against both headline and core inflation, we can see even with these rises, 4% is bigger than 3.3. It's still bigger than 2.4. And that, of course, tells us that wages are catching up and starting to lap the increases in prices. So we're starting to make up lost ground for when wages, of course, lagged this much faster inflation back in 2021, 2022. So that, needless to say, would be a positive story for consumers and could encourage this very thing. We'll see if the recent jump in crude oil in any way impacts what's going on here and sours the mood if inflation expectations perk up a bit. But that may be out of the scope of this survey. The recent jump in crude oil, perhaps too recent of a move to factor in here. And so what we end up with then is a story about the biggest engine of U.S. economic growth attempting to accelerate. And that would, of course, tell us hotter inflation numbers are probably here to stay and fewer rate cuts are coming. That is to say, the bond market is right. The stock market should follow its lead. So this might be a little bit of clarity, but then, of course, it would be dismal clarity for stock bulls if what that means is you get a further eating away of rate cut expectations that then tips stock markets over. And so this is what we're going to be watching here until the end of the week. But the path of least resistance seems to be in the direction of still higher yields when these numbers come out, if the bond market is ultimately going to prove telling. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show that I co-host with Chris Vecchio and Dylan Radigan, looking at the Wall Street close and where things may trend thereafter. I'm back with Chris tomorrow for Futures Power Hour, so come and join us for that. We'll untangle what's going on with these consumer confidence numbers and where things ultimately landed into the end of the week. I'm on with Victor Jones and Tom Sosnoff for First Call on Sundays, back with Victor for The Price of Truth on Wednesdays, writing for the news and insights portion of tastylive.com, and opining sporadically on the platform formerly known as Twitter at Ilya Spivak. If you're watching this on YouTube, do like and subscribe so that we can get this out to more eyeballs. Macro Money is done for the week, but we are, of course, back next week as per the usual. Futures Power Hour again is tomorrow. Happy trading. See you soon.
Hello, everybody, and welcome back to Bad Taste. Joined with me today, Luis. Luis, thanks so much for joining me, dude. How are you doing?
Awesome, Julia. Thank you for having me here. Excited to be here. A lot to talk to. Earnings season starts tomorrow. I'm excited, Julia. I don't know about you, but definitely in for some adventures, especially with tech also coming in 2 weeks.
For sure, yeah. I feel like we just scraped by with earnings, and now we're back all over again. This is great. We had some pretty interesting earnings today. Delta Airlines actually donked a little bit. It could have been a lot worse, and that's mostly, from what I can tell, attributed to the CrowdStrike outage. So, yep, could have been a whole lot worse. But otherwise, yeah, we had some pretty interesting movers today. Weird market, actually. We wound up like pretty flat on the day, but I think it's just the speed of some of these intraday moves that have been been a bit of a whirlwind. How did we wind up today?
Ended up, Julia, basically a little bit on the red. I was flat at some point. My shorts and MES, I left them. My contracts that I ended up a little bit surprised with the rally at the end of the day, but seems like we've been getting this similar pattern this week alone. DAT, that's the one that actually messed with me. It's up 100%, Julia, over the past 2 weeks since making lows of 11.75 almost 2 weeks ago. Over the past week alone, it's up 50%. So DJT messing with me for the second time again. And I don't know what I'm going to do with it. Maybe just close it like tomorrow, because I already struggled with it once in March. You saw it. And once again this week.
Yep, big ups, Bad Traders, Organic Farming, thank you for joining us. Brian the Nurse, awesome to see you here. Thank you for joining us. Lone, awesome to see you. Thank you for joining us. Mind Power, we missed you trivia today. Banana Cheeks, what's up? I sold DJT too early from Mind Power. Yep, I remember you guys were going, well, Mind Power was going in long a couple days back. So I don't know if you made any money on that. That's remarkable, to be honest. But yeah, I don't know. We talked about this a little bit earlier today about how like it's a little deceptive to just look at the signal alone, given how much news context there is around this underlying in particular. We've been seeing, at least if you guys look over at Poly Market or some of these other prediction markets, Trump starting to lead, especially in Poly Market. But yeah, so this has been, oh, y'all, I don't know. I'm not touching this with a 10-foot pole. I'm just trying to survive earnings, and we have our cycle kind of kicking off tomorrow, actually, with some financials reporting. Mind Power, I'm not touching it at this point. Yeah, I'm not either. But Luis, you had more cojones than any of us, actually. You got in pretty much right after it got listed.
Yeah, I got in when it got listed around the $40 per share short, but I got stuck between a range that lasted almost literally a month at the end of April and ended in May 29. Around that, I got tired because of the high borrowing fees. They were around like 200% at that time. Now they're way cheaper. I got it like maybe 1.5%. So basically, not any longer preoccupied about the borrowing fees, the hard to borrow fees on DAT. A little bit more worried because of the high speculation. It's on Donald Trump. Right now, we've discussed it. Kalshi puts them, Kamala Harris and Trump 50-50%. But the Poly Markets puts Trump at least way over advantage on Kamala Harris. And seems that it's all because of a single user called Freddy9999.
We've been hearing about the Freddy. We had a very, very loud endorsement from Elon Musk over the weekend, which kind of started this entire cascade fall up the stairs, if you want to call it that. So yeah, and so Freddy999. I haven't actually looked at the Poly Market pool, how big it's gotten. It was over, I think, $1 billion the last time I checked in earlier this week. So this, I know there's a lot of conspiracy theories around who the identity of Freddy is.
There's a speculation that maybe it's Elon Musk because
Could it be?
He's been making some, maybe, who knows, after there are some Twitter or social media sayings that might not be him because of how he's actually been behaving lately, also with his tweets. You know, how people actually like to look into that stuff. But also big news for today for Tesla as they're having their We Robot event. 3 major news that are expected to come today for Tesla, Julia. I don't know what's going to happen for tomorrow. People are going to be watching if Elon Musk deliver with his promises. Honestly, about the robotaxi, even though I'm excited about it, I think I'm more excited to see their cheaper EV vehicle, the below 25,000. They're going to announce. They're expected to be announced. That's what actually saved them a little bit in their April report. That's what actually, once Elon Musk said that they were not going to scratch that plan off from their plans this year, investors were very happy. So I think personally, having a very cheap EV vehicle, especially made from Tesla, it's going to be well received for the bulls. I have nothing on Tesla right now, but lately just a lot of bullishness besides disappointing on their deliveries for Wall Street on October 2nd.
I mean, yeah, year to date, Tesla's actually down about 4%. In the past year, it's down about 9%. So Mag 7 ain't so magnificent these days. But I mean, the robotaxis, I don't know. I don't think I want a robotaxi. Is that just me? Does anybody want the robotaxis?
Maybe not the robotaxi, but Julia, what about their Optimus humanoid robot? They're also expected to make some announcements of it today. I've seen it in some videos. It looks really cool. Some people are actually saying that the Optimus is going to be the one driving the taxi, but that's just speculation. I doubt it.
That's pretty good. Over here in chat, yeah, Tilray was a bust. Hopping a little bit over. I'm definitely watching this product announcement in Tesla today. I think that's one to watch. But Tilray, yeah, this one surprised me a little bit today. It looks like, down 2.5%. This was, and it's recovered actually quite a bit intraday. But this one surprised me because they actually posted a better than expected loss. Oh God, the chart is horrific. Oh my God. Okay, maybe not that. Let's go back to let's go to 1 day. Yeah, the chart is horrific. But yeah, this one surprised me a little bit. It did recover intraday, still wound up on the day around 2.5% down. I honestly, they lost less than expected. Last year, they lost an awful lot more. With the reclassification of marijuana on the horizon, I think that, I was a little surprised to see this. In fact, it was a bust. Someone was talking about, I think it was Mind Power and Organic was talking about the call skew in DJT, which I actually did not notice until you pointed it out. Oh my God, the call skew. So 16 deltas around $15. It's trading at 24. And then, oh my God, that's like 3 or 4 mouse scrolls to get to the 16 delta on the other side. That's such an insane amount of call skew. Oh my God.
Now you got me a little bit more worried. I did not look at the call skew. Had to hanging the bag also with the DAT, so I might actually just leave it and do nothing after the elections, because if Trump were to win, that I have no idea. I'm in Mexico, so I don't know about the U.S. elections, or won't even be voting, so I'll leave that aside, even though fundamentally that sucks. For me, it's expensive at 10, even at 2. Somebody said also on Tuesday at the Bat Trader that
it was
DAT
at 14
was
bucks. It was too
2.
expensive.
Yes.
Hey, I think that was a Grumpy Mike quote, if I do recall. This thing's been absolutely bananas. Certainly going to keep an eye on it. I'm not touching it with a 10-foot pole. But also, Dan's joining us. Thank you so much for joining. I was about to just say that about the Optimus robot. That's hilarious. So funny with Tesla, with DJT, Tilray. Some really interesting movers. Yeah, the Tilray one, that surprised me a bit. Let's look on over to the S&P and see how the day landed. AMD, a little bit of a donk today, which has been lagging behind some of its some of its competitors. It sold off quite a bit today. I guess that's what happens when you go up against NVIDIA. Year to date, it's still up 18%. But again, kind of comparing it to some of its other competitors, it's actually lagging behind quite a bit. Really quite the sell-off in there. Moderna down 3%, PayPal down 3.2%. PayPal just can't catch a break. Damn, dude.
Oh.
First Solar down 9%. Oh my God. Enphase down almost 6%. And then VST, one of our sleeper builds, down 2.7%. Pretty big move across energy today. Look at that.
I'm happy with that. I'm happy with the utilities down a little bit since I entered a short position in XLU today. You saw it. It's a very baby trade, but at least wouldn't mind to have a winner after utilities being the best performing sector year to date, the hottest trade right now. Not surprised. I'm surprised to see Enphase and all of those Solar Edge, First Solar. They got downgraded today. And I don't know what that has to do with either Trump as well, having higher chances of him being in office. But those haven't been able to catch a trade. You and I have discussed them and seeing, especially in Enphase, that I like the most. Every time it seems to catch a little bit of a rally, just goes back down. And honestly, the price action seems very weak on it, and a little bit disappointed. But at least maybe it actually gives an opportunity of an entry point, because CrowdStrike, I was bullish on CrowdStrike around 220 per share. I regret not holding it even more today. I think it was the biggest gainer on the S&P as CrowdStrike.
Look at that. CrowdStrike up 5.5% after so rudely dragging Delta down, apparently, allegedly. Delta down 1% today. They missed, they pretty significantly underperformed on their earnings report. So 1%, it could have been a lot worse. And they kind of chalked this up to the outage, which I don't know if I necessarily buy that. But CrowdStrike having a pretty good day today. This one's been so interesting to watch. And I haven't traded this myself, but I've definitely been watching it. IV rank of 31, November 26th earnings, so definitely tradable. before things start to get a little bonkers. But after a move like today, I don't know, man.
Oh, I like it. Well, but after move today, also maybe even would wait at least for earnings, because I was surprised out of the whole earnings on cybersecurity stocks. CrowdStrike was the least to have the, I think, the strongest guidance of them all. Even after the outage, seems like the only impact for them was the fact that they were going to give a $10 gift card for their clients who were affected by the outage. That for me just is silly. But they only attributed their lower earnings for that single fact. And you see other companies, SentinelOne, Okta, similar, getting more crushed after weaker earnings or weaker guidance. Sorry, but talking about guidance, that's going to be key for tomorrow, and especially for banks, Julia.
I'm watching banks closely. Financial sector ETF, XLF for maybe a diluted earnings play. Man, have financials had a strong year. Oh my God, in 2024. That's like, I mean, obviously we've had a little bit of chop along the way, but my goodness, is that strong. And then let's take a look. Who's actually, I should have this pulled up, but for earnings tomorrow, do you happen to know offhand the big names?
JP Morgan.
JP Morgan, yeah.
Wells Fargo as well. We're going to be reporting tomorrow. Those JP Morgan, I was looking at what the analysts are expecting. Over its past 4 earnings, they've beat both top and bottom line on the past 3. They missed on their fourth quarter earnings last year, missed both top and bottom line. But right now, analysts are very bullish. Out of the 25 analysts that actually follow JP Morgan right now, 15 have a strong buy on it. And also right now they have an average price target of around 217 per share for JP Morgan, which is not too far off from what it's trading right now, around 212. So yeah, they're expecting, they're a little bit maybe nervous because the most important thing, which we're gonna get later on the slides, it's gonna be their guidance rather than their third quarter earnings.
Well, I'm like just generally a little bit skeptical, just again with like interest rates changing. Like I'd imagine that this puts like a bunch of different financial companies, but especially banks, in sort of a dubious position. We've talked also about like the increased liquidity requirements, which I think is getting bumped up to 20%. So, and again, after like I would say pretty bullish year. I mean, like XLF, financial sector ETF, again, kind of going back to that with some of these big names in there. In the past 1 year, it's up 37%. So, obviously not as explosive growth as what we're seeing across like semiconductors, for example, but for something as like well established as like some of these major financial companies, honestly, I'm a little skeptical. But I guess tomorrow is going to have a lot to hold. I'm trying to, again, minimize some of these exposures. Just a quick recap of the positions. I wish it was a bit more of a green day today. Oh, my dear Beto trade. Oh, this is, I think I held it too long. We talked
Julia,
about this.
Today,
some of these
you
regrets.
saw the movement on Bitcoin right now? It's been dropping.
Oh, it's under 60. Uh-oh.
Yeah, under 60.
Uh-oh.
That's why I got rid of Bito. I'm happy with the dividend. Maybe the play, if you want to take advantage of the dividend, buy some shares before the ex-dividend date. Hold them for around a week, because a huge dividend, around 75%, plus also paid monthly. So you can take a lot of advantage. But honestly, looking at the price action dropping since April, don't like it. And there's some weird stuff happening in crypto. MicroStrategy, we were discussing it on Tuesday. I wanted to actually took a bearish position on MicroStrategy, but right now it actually hit its highest level relative to Bitcoin since 2019. Year to date, MicroStrategy is up around 190%, while Bitcoin is only up around 40%. And on a price action basis, Bitcoin basically has been dead, trading around 55,000 to 70,000 for the past, 9 months. So yeah, I don't know. It's very weird for MicroStrategy because even though they hold around 250,000 Bitcoins, which is quite a lot, that's not their main business. So I'm maybe going to look into put something tomorrow with MicroStrategy on
this
a
chart
short.
is disgusting. Like this chart is so nasty. This is a nasty chart. See, honestly, a little surprised to see Bitcoin down as much as it is, because you'd think with like CPI coming in a little bit hotter, gold having like not the strongest day in the world, but pretty strong day. Gold's been smashing through all-time highs. you'd think that like Bitcoin would be performing a little bit better. So it seems like there's something brewing here a little bit that I'm not exactly tuned in. But yeah, either way, yeah, this was an interesting lesson. So the BITO, we got the dividend. This was a good lesson, I think, when it comes to maybe seeking out higher dividend paying ETFs or stocks to maybe go with underlyings that are a little bit more, let's say, established, maybe, you know, tracking some of the market indices such as the S&P. Gold position worked out pretty well today. Yeah, SPY sold off a little bit towards the end of the day, so did the NASDAQ. But we wound up, man, a flat, about as flat as can be on today. How surprising.
Yeah, I would have wished we could have gone more downside momentum.
Of course you do.
I thought we were gonna get it around the 2 p.m. Central Time, but like always, we get this push higher at the last 15-20 minutes. So with today's price action, wouldn't be surprised if tomorrow we get another record high close for the S&P, because not even a higher than expected CPI, even though just 0.1%, was able to bring down the market. So bulls pretty strong right now.
I mean, well, this is another just nasty chart. Again, looking at some of this intraday volatility. It's been a lot of those. I can't imagine what the 0DTE guys are feeling on days like today. I'm kind of glad that I didn't have any kind of really short-term exposure. I would have been holding on for dear life. But yeah, all in all, ended about as flat as you can get. We have regional banks over here in chat. KRE is the regional banking sector ETF. Traded this a couple times. IV rank is 66. Pretty moderate down day today. Not really moving a whole lot. This one, yeah, tracking regional banks, tracking financials. Yeah, this is another one that I'm watching kind of closely. But that being said, yeah, it's going to be an interesting way to kick off earnings. KRE's been pretty flat on the year, actually, which I guess is not terribly surprising. VIX still over 20, or VX still over 20. Where's the VIX at? Let's check that real quick. Over 20.93, which guess what? Is just right around long-term averages. Isn't that funny?
Yes.
All said and done, it's right around long-term averages. Look at that. Hell yeah, guys. Okay. So that was a nice little tour to market. We got a really interesting day gearing up for us tomorrow. Excited to see what kind of shakeup this could bring. Feel like, yeah, CPI been quite the shakeup today. Joblessness claims been quite the shakeup today. DJT, everyone's just watching. So what's it going to hold tomorrow? I don't know, but I'm not touching it. But let's go ahead, hop into some market news and trivia. Got one trivia question from earlier today for anybody who missed it, and then one new one from the same category, which I'm excited to get into. But first things first, we do have an app. We just made some sick updates. We added a stock screener. We have some very cool updates coming out in the next release, which is hopefully going to be out next week. So if you want to go download it, we'd love to have you. We got points, badges, stream chat, journal, Tom Fleury. You can find us in the App Store and the Google Play Store as well. If you want to come throw your answers to trivia in chat, you can find us on the tastylive YouTube channel at tastylive show. And if you want to follow us on X, formerly known as Twitter, you can find us on @BadTrader app. Luis finds some really cool stuff to dig up and feature on there. So we got a little bit of news first. What do we got?
Bank earnings tomorrow, Julia. The spotlight, JP Morgan and Wells Fargo. There's a key thing for everybody interested in earnings, especially for banks, because right now Morgan Stanley even said that the most important thing for tomorrow is going to be their guidance, not the third quarter earnings, because as we already saw, we got the first rate cut over the past 4 years from the Fed. Let's see how banks actually perform with steadily decreasing rate cuts. JP Morgan right now, they said on September 10th that their 90 billion net interest income was too high. So we might see a decrease tomorrow. Definitely something you don't want to see for banks. Wells Fargo also said that it kept its net interest income steady, expecting an 8 to 9% drop, which its CEO called to be in line for what's going to happen right now with the Fed. So that's going to be a key metric to pay attention tomorrow for these reports.
For sure. And for anybody who's interested, so XLF, which was the financial sector ETF we were looking at earlier, about 13% of that is Berkshire Hathaway, but then about 10% of that is JP Morgan of the holdings. Then we also have Visa, MasterCard, Bank of America makes up one of the top holdings. So does Wells Fargo, as well as Goldman Sachs. So potentially for I call them diluted earnings plays by trading the sector ETF is one way to get some of that exposure. So for anybody who's interested in that, XLF can offer that. But thank you so much for putting this together. I think it's going to be a really interesting day tomorrow.
Yeah, and also earnings per share revisions. They've actually been, out of the 6 major banks, for 4 of them revised downward especially for the 6 months, mainly due to the fact that the Fed had a bigger than expected rate cut, 50 basis points. And this, given to the importance deposits are to net interest margin, which is the difference between the interest banks earn loans and what they pay to deposits, it's going to be, like I said before, something to pay attention. What's their guidance? Definitely don't want to see a lower than expected guidance from what they already said, especially for JP Morgan and Wells Fargo. So analysts haven't been really bullish lately on earnings per share growth for the next year and this year on banks.
Nice. I don't know. I think I don't know. I wouldn't say that I'm bullish on financials this year, but I guess I wasn't bullish very much last year either, and we turned out to have actually not a very bad year. Actually, it was pretty strong for financials.
Yes.
But yes, thank you so much for giving us some of this information, some of these snapshots. We got a lot to look forward to tomorrow. And now we got some trivia questions. I wanted to pull from Stonk or Donk, which I thought was a fun category. So this is a new question. So we got one question from earlier today. This is a new one. So feel free to shout out what you think. But this is the category Stonk or Donk. We are going to be covering both stonks and donks. But in April of 22, this stock dropped 35% in a single day, big old donk over there, after reporting the first decline in subscribers in over a decade. Which stock was it? This was in April, and if you can guess the exact date in April, you get brownie points.
I was surprised by this stock. I honestly did not expect it.
Me too.
Yeah.
I thought it would have donked way sooner, to be honest. I was surprised it took until April of 22. So which stock donked, guys? Go give your answers over in chat. And brownie points if you know which date in April. Maybe the most, I don't know, referenced date in April.
Around first quarter earnings.
That is true, yeah. Go ahead, everybody, give your guesses over in chat. I have a sneaking suspicion Luis knows this answer. Anyone who is trading in 22 probably does. What could it possibly be? What could the date possibly be? We got Netflix from Grumpy Mike. We got Netflix from Mind Power. We got a from Organic Farming. And we got a guess at 422 from Grumpy Mike. From Mind Power, we got 420. Netflix from Steve. Thank you for joining us. Welcome to the party. Also, Hedged Hog. You have a great username. Dutch East India Company. That's a great guess, Dan. I love that. Okay, everybody, go ahead, give your guesses. Luis, do you want to give your guess?
Did we see this one earlier, Julia?
This one was not shown earlier.
Oh, this was not. I was also like thinking, I was also thinking.
April Fools or the Ides of March from Bob. Thank you for joining us over on Tasty Live today. Awesome to see you. 4/15/22, most referenced date in April.
No, a decade. I'll have to go, Julia. I'm a little bit doubtful on this one because I know the stock dropped around like 26. Yeah, but I'll go with Meta. Meta, yeah. I know they had a big drop after missing earnings subscribe. No, sorry, you said subscribers, not daily active users. I confused it. I'll go with Netflix because I know Netflix had a really bad year in 2022, specifically in those months.
Yep. Do you want to give a guess on the date?
Yeah, I'll say April 10th.
April 10th is a great guess. We were looking. Netflix is correct, but 420.
420.
Yes, 420.
Yeah.
Which I was honestly surprised by the irony of that.
Yeah, when you reach the price of around like 150, 160 per share, today's trading at 730. Yeah, big discounts on Netflix.
Huge. I mean, like 35% in a day for something like Netflix, like that, dude, that was insane at the time. And honestly, I mean, compared to some of these other numbers that I'll show you guys probably know this, but if you were not here for trivia, then you can go ahead and throw your answers in chat. But in February, again, of 2022, Meta, formerly known as Facebook, lost $232 billion in market value in a single day. The stock itself was down 26% after earnings. This loss surpassed the previous record for the largest single day loss recorded that was 17 months earlier. Which company held that record? So which company did Meta beat for largest single day loss in a day 17 months after this record was surpassed? Because everybody, I think a lot of people know the Meta one. This was obviously a big deal back in 2022. But what I thought was interesting was the company that actually had the largest loss ever recorded in market cap before that, which was only 17 months earlier, which is insane.
I got this one wrong. I was surprised by the answer in this one.
I was also
Did
very
not
surprised.
expect it. Yes. And there's a really good graph from Bloomberg that I'm seeing the rough day of the worst performing days or worst losses on a single day market cap.
Do you wanna send it over? I can try to pull it in. Taco Bell, Grumpy Mike, that's a great guess.
I'll send it over, yes.
Yeah, if you send it over, I can try to plop it in. I love me a good graphic. But yep, this is from our stonk or donk category. I guess we're mostly doing stonk or donks today, I'm sorry. But we're looking for a company that previously held the record for largest single day loss in market cap that Meta broke the record of merely 17 months later. Is the answer Jim Cramer, perhaps? That was actually the answer to a lot of our trivia questions today, so that's not a bad guess at all.
Yeah,
Go
Jim
ahead,
Cramer and
everybody.
Bill Ackman.
Okay, Luis. So what was the answer you gave? I think you actually mentioned the answer, but then switched your guess.
Yeah, I was actually thinking on Netflix for this one. That was my original answer.
Yeah.